Okay, everyone. So today we're going to talk about bond valuation. So the past few weeks we've been covering stock valuation, and this week and next week we're going to focus on bond valuation. So the reason why this is important is if you want to work in fixed income, you can possibly work as an analyst, a portfolio manager, or a trader. My experience with Victory Capital was working with the analyst team. So I will try to relate that experience to you all. Just a brief description of the work. As an analyst, you're going to be responsible for covering sectors of the stock market as determined by your managers. You will need to know the firms within these sectors very well. This means you need to stay current on the macro trends. So what politics are affecting your firms, what is the political climate, and you also need to know the micro events that are directly affecting your firm. So your job as an analyst is to determine how these factors are going to affect your firm and also the sector. So their competition, other comps, etc. You're also going to cite, the data that you're looking at from the 10Ks, the 10Qs. You'll also use sources like Bloomberg, CapIQ for that data. And basically, you're going to put all this information together to tell your team, to tell the portfolio managers, is this bond worth investing in? Does it look attractive? Is the yield looking good for the portfolio? So there's different types of portfolios within your firm. Will it fit in some portfolio managers' folder better than another? So you're going to put all this data together and give your opinion as an analyst. In practice, what this looks like, so today I'm going to show you how bonds are issued, how you can find them, and then we're just going to talk about the meetings briefly that you might go through. So in the mornings before 10 a.m., normally before 9, the new issues are announced in Bloomberg. And so you're going to want to have your research done on the firms. Like you're going to want to know the firms pretty well within your sector before, or pretty much as soon as you can. And then if a new issue, if your firm's issuing a new bond, then you're not going to have much time to do research on the firm. So that's why you want to know a lot about them going in to the morning. And this is something that you learn over time, right? It's not right away that you'll know your whole sector, but this is something that's worth investing your time in. And so you're going to need to be able to express why these bonds look attractive or not. So that's what we're going to cover today. We're going to talk about the new issue process and discuss looking at some comps and how you can do that. Excuse me. So first, right now I'm sharing Bloomberg with you all, and so you're gonna first start off by typing in NIM if you're in the Bloomberg terminal. So you'll see there's a couple different options here. You have new issue monitor, and then NIM 1, 2, 3, and 4. They are different sections of the new issue monitor. So if you're looking at corporate bonds, private placements, 144A, which that's going to be most of them. You're going to look at NIM 3. Today, I'm just going to look at the broad new issue monitor, which is NIM. And we're going to, so you'll see here, there's a lot of data. So you'll see some names that you might recognize, Sherwin-Williams, Bank of New York. If you search through here, you're going to see a lot of information. But one way to filter is, we'll type in new. So we're looking for new deals when we do that. Then today we're going to look at the public storage new deal from 11/4. So today we're going to look at public storage. So that's PSA is their ticker. But if you just scroll down, you'll see like it's in chronological order, right? So the most recent would be at the top. And public storage This one happened on 11/4. So let's go ahead and click on it. Okay, so what we see here is you're going to see first, you're going to see 3 tranches. So a tranche is just the different maturity bonds that they're talking about issuing. So first, you're going to see the 5-year. The IPT stands for initial price talk, and they're saying it's going to be in the plus 70 area. Then you're going to see the second tranche, which is 7-year plus 85 area. Third tranche is 10-year plus 100 area. And you'll see the terms. So there's a 1-month par call. So the terms are, these are the expected terms. What I really take down, or what's important in this area, is you want to look at the initial price talk. Normally, the bonds, when they're actually launched, are going to be much lower than what's being announced here. You're also going to want to know the expected ratings, and this is going to be useful for doing or looking at comparable bonds that are already issued. So in this case, today we're going to look at the 10-year tranche specifically. So the initial price talk is in the plus 100 area, and it's also an A-rated bond, right? And normally, just so you know, the expected rating is normally tied to the parent company. So bonds normally have the same credit rating as the issuer, which is Public Storage. Sometimes if it's a project that's not as correlated with the firm and what they normally do. So for example, if Ford is going into electric vehicle, you know, it's a newer project, they might have a lower rating on that bond than the parent company, so Ford itself. In this case, this is Public Storage. They have an A rating, so it's the same rating as the parent company, or at least that's expected. You're also going to want to look at the terms here. So it's senior unsecured. That's going to be important. And then here you'll see what the proceeds are going to be used for. So what is Public Storage's plan? In this case, they're acquiring all storage. So it's also important to know why they're using this money, why they want it. The denominations here, not as important, but in the amount of 2,000 or 1,000. The book runners, so those are the underwriters. You have Citi, JP Morgan, Wells Fargo. So that's pretty much what you're going to see when you see the new deal in the morning. So again, this is before 9 o'clock. It was at 8:54. And all of this is going to happen. There's 4 steps. They're all going to happen pretty much the same day. And so that's the first step. Second step is going to be the guidance. So here, what they're going to talk about is where the pricing is actually, it's going to be closer to what it will actually price at. So initially they said plus 70 area for 5-year. It's actually, they're talking about plus 45. So again, normally you're going to see that the initial price talk from the new deal, when it's first announced, the price that it's actually going to launch at is a lot lower, especially if there's a lot of demand for these bonds. And this one's A-rated, so excuse me, it's pretty stable, right? It's probably not going to default, so it looks more attractive to some investors. So that's really the only new information you'll see at the guidance. This happened at 12:24, so just a few hours later. Then at launch, you're going to see again it tightened a little bit. Once again, this is going to be the price that it will launch at. So again, we're going to focus on the 10-year, and it's now at plus 73. And the numbers you'll see here are how much are going to be in the tranche. So there's 650 million from the 5-year, 550 million in the 7-year, 550 million in the 10-year. And that's based on the demand of the institutions. So whatever firm you're working for, if they want, 100 million of something, it's all cumulative. So basically, that's how those numbers are kind of determined. And let's look. So this again happened at 117. So again, pretty quick process. And then at price, it's a done deal, right? So these are the final amounts. These are the tranches. These are the guidance. So it priced at 43. Initial price talk was 70. It talks about coupon. And so you'll see the terms for each different tranche. Okay, so now that we know the details of the bond, we're going to look into some of the comps and how to do that research. So for me, if you give me a second, I'm going to log into CapIQ. I had to switch computers, so give me 1 second. All right, so we'll go into CapIQ. Again, you can do this through the UTSA library. So again, go to my UTSA. Then you're going to go into library homepage, databases, see CapIQ. In case you don't know how to do this yet, sign in. And so we're going to look at public storage. So this is an easy way to get quick comps because they already have it available, this information. So we're going to look so if we look here on the left, I apologize, I had it earlier, but you'll look at peer analysis, and then you're going to look at quick comps. So these are going to be firms that operate in the same space as public storage. You'll see the top 3 are the closest rated. So they're not quite as large or established as public storage. I know this from looking a little earlier through their data. But what you'll do is you'll take down these firms. So we'll take down EXR, CubeSmart is Cube, Life Storage is LSI. We're going to see where their bonds are trading at right now. And then that'll give us kind of a gauge of where we should be trading. So if this is a triple B rated bond, it's lower than an A rated bond, right? So that means it has a higher default risk. So the spread should be wider with these kind of bonds, right? And so what we'll see is I take down these tickers, then we're going to go back to Bloomberg. So we can open up a new tab and we're going to look at their bonds. So EXR Corp is their bonds, EXR US Equity is the stock. You can look in here, and again, we're talking about a 10-year bond, so you want to find something that has close maturity, as close to maturity as possible to the firm or to the bond that we're looking at. So this one's going to be a 10-year bond. It's a few months off, but it's still pretty close for what we're looking at. You'll click on that particular bond, then look at the yield and spread analysis. And so here you'll see the data on what is the spread currently on this particular bond. We already know the maturity. And so what you're going to do is use this information to compare to our original bond. So again, we were expecting a higher spread than what's being offered for the public storage one. Let me pull that up real quick. Oops. So the one that we're looking at, this one. So the at launch, which was sometime last week, the spread was 73. Now it's at 66.51, so it's tightened a little bit. But you'll see on the triple B rated bond from EXR, the spread is 101.38, right? So that's what we expected. If we also look at the other competition, you'll see if some firms are trading tighter relative to their credit rating. That's just one tool you use in analyzing these firms. But give me 1 second. Okay, so in Cube, again, we're going to look for a 10-year maturity. So you find the maturities here on their bonds. So this one's another 10-year. Yield and spread analysis, and this one is trading at 79.74, right? What you're going to want to do is, in this case, so public storage is actually, it's a higher rated credit, right? And the spread is not that far off. So as you work with fixed income, you're going to start to understand, where these bonds should be valued because you're going to see them, on a daily basis. You're going to start to understand like AAA, triple B bonds, where they should be trading. So this is just initially looking, if you're trying to do some quick research, their competition, I could talk about this to the other portfolio managers, to the traders, if they have questions about this particular issue, right? So that's one thing that you're going to want to look at first. You're going to want to look at the yield to worst. So right now, let's see on public storage. This is the yield to worst. Over here on EXR, slightly higher as you expect. Over here on Cube, again, slightly higher, and again, it's correlated with the spread. So for some reason, Cube and EXR, they're both triple B rated bonds, but you get quite a bit more spread and yield compared to Cube, right? So that's something you're going to look at. And the reason why we're looking at these things is, as an analyst, you're going to want to understand the portfolio managers, their folders. What do they hold? What is the yield that portfolio is offering? And you'll kind of understand what the portfolio manager is looking for. If they want more secure debt, if they are willing to trade some yield, if they need more yield, then you probably have to go with a lower rated bond in order to get that additional yield, right? So in this case, if the portfolio manager was looking for like a triple B rated bond for something more secure, then you might look into this one, EXR, even though it's already issued, just because it has a better spread, a better yield. But again, we're going to go back to public storage for now. So if the portfolio manager, for instance, the portfolio that they're managing has about a yield of 2.53, this is just a very basic example, they may not want to give up yield to get this. So this may not be attractive to that portfolio manager because it would bring down the yield on their portfolio. Excuse me. Does that make sense?
Mm-hmm. Okay. I mean, there's a certain, just compared to the stocks, you don't want to have like an outlier.
Yeah. Right. And so since you're managing a portfolio for your clients, right?
You have to adjust it to their standards and their.
Yeah. So like you could have really secure.
It's not horrible, right? Like it's still, but it's just depending on what their standards are. Yeah, that's pretty much it. And then also, so there's different types of portfolios, right? So you're gonna have short-term, medium, you're gonna have long-term portfolios. So what are the yields in those categories? And then sometimes they can only invest in investment grade bonds, right? So that's going to have a lower yield, but then also anything triple B or above, right?
And anything below triple B is special.
Is jump.
Jumbo?
Yeah. So in this case, these ones that we're looking at are all investment grade, right? But again, you still have to know what the portfolio manager is looking for. And, you know, and talking to them, you're going to build that relationship, right? And you're going to know, okay, they're probably not going to like this. And for the most part, you know, things are trading really tight right now, so they're probably not going to want a lot of things that are being issued right now.
Mm-hmm. So like triple B's have a high spread.
No, it's not that they have a high spread, but they have a wider spread. You know, I say wider spread than like an A rated bond.
What
Right?
do you mean in terms of wide?
So wide is like it's bigger, right? So they're offering more spread. So this is Public Storage, right, which is an A-rated bond, A-rated firm. And then, so they're at 66, right? So the spread is tighter. That's the term that they use. They're going to say the spread is tighter than on these triple B bonds. The spread is wider, right? And then they're also offering a higher yield, right? Yield to worst. That means yield to worst means if there's a settlement date before maturity. So that's, you're going to find that in the workout here. If there's a settlement date before then what's the yield up till that date? Okay. And so sometimes that's something that portfolio managers look at too, is if they can call the bond early, then, so which means they can settle it.
Is that like options?
No, it's not an option. It's just written into the terms when they initially issue it. So is it callable or non-callable? So when you're looking on Bloomberg here, yeah. Callable means that they can pay or like redeem them early, right? And then there's going to be like a date, so it'll be like a par call. So like sometimes they'll say like 5 non-call, like you have to wait 5 years, or there's different terms, but you'll just get more familiar as you see it. So if it's a 10-year bond and they can call it 5 years, that's important to know as an investor, because if the credit ratings or if the interest rates are lower at that time, they're probably going to call it, because then they can decrease the interest that they're paying on that debt, right?
Oh, okay.
So if they can, so it's kind of like a refinance, right? On a mortgage.
Yeah, so you like buy it at a higher interest rate than like pay for it, I think, so you call it.
So if when you initially issue, right, if so say it was like before COVID, right? So interest rates were higher. So when you issue the debt, you're going to pay more interest for whatever bonds that you're issuing. Now during COVID, right, interest rates dropped, and so a lot of firms that were able to call their bonds, they refinanced them, so they got locked in a lower rate. So you're paying less interest, right? You're saving money for your firm.
So you're not selling, you're just refinancing it.
Yeah,
To get the lower rate.
Yeah, that's really what they're doing. And so since you are changing your rate that you're working with, it's kind of like a new.
Does it change the time? Since you initially bought a 10-year and you call it 5 years, does it change?
Because that means like yours is like settled, right? Okay. So like they settled that bond, and normally what'll happen is, you know, the shorter maturity tranches and earlier issued bonds, those are going to be settled first versus the long-term ones, because those are due sooner than the later
tranches, right? So like if you have like a 5-year or a 30-year,
Mhm.
you're gonna pay off the 5-year first because you don't want to default on that, right?
Yeah.
So that's kind of how that works. So again, I'll just try to get back here.
Sorry.
No,
Okay.
I think it's good because we're talking about, why are these things important, right? To understand. So basically, that's kind of what I wanted to talk about today for um, this class was just the covering the new issue, right? So there's 4 steps that you're going to see in Bloomberg. You're going to see the new deal, you're going to see the guidance, the launch, and priced. As you can see, those are all up here. And again, you find that when you go into NIM, the new issue monitor, you can filter. If you're looking for a particular company, you can type that in. See public storage, public service, so you can filter that way. Oops. Or you can also do new, right? And each morning, right, there will be a number of new issues. So just today, right, it's quite a few. But again, you're going to look at the ones that are pertaining to your sector as an analyst. You're going to look over the terms and then start comparing it with, their competition. And in this case today, we looked at public storage competition. None of them are rated A like they are. The closest was triple B. So in the future, well, next class, I'll cover how you can find some firms with A rating to compare with public storage. So then you can see, is this more attractive? The best thing to do, or the best option you have, is if EXR or Cube would have had an A rating today, then you can directly relate them to public storage, right? Because they're in the same industry. They're, for the most part, the factors that are affecting each firm are going to be highly correlated. So that's why it's a good basis. You can look at a previously issued bond issue. You can look at a previously issued bond, and you can see where that was priced at. And then you can use that as a basis for your argument because it's highly correlated. But next week, I'll show you just how to find other A-rated bonds. And even you can also even look, higher and lower below your bond, because that way you can see if it's trading really wide compared to other comparable bonds, then that's something you might want to talk about. Like, hey, this looks attractive because it's rated as an A bond, but it's trading, it's offering spread, as wide as a triple B bond. That's something, really important to look at. So again, that's just what we were going to talk about today. Let me just make sure I covered everything. Yeah, it looks like I covered everything for today. So next week's class will be the last class for this, for the valuation class. We'll again cover bonds, and I'll actually value a bond from start to finish. I may not be able to cover it as in depth as I did today with you guys, but this was the basis for what we're going to talk about next week. So if you have questions, feel free to shoot me an email. And thank you guys for participating.
Right, so once more, you would look at, right, using the function DES if you want to get a better overview, right, of the company and the firm that you're going to analyze or even forecast. But, another key additional function that you will be using, right, especially if you do want to forecast and you do want to get a better overview of the firm that you're analyzing, is this function CCB. So it's the company classification browser. So essentially with this, right, and again, another example of GE, but we can sort of see the different segments of their revenue and how it could be sort of formed in a hierarchy manner. So here we can see, well, they're going to be exposed to the financial sector, right? And percentage of revenue, what would that sort of look like? Also, healthcare segments, industrial segments. So, again, you can sort of get a way better overview of what firm you're analyzing, what does it consist of, what's going to be sort of the main drivers for revenue and for growth. And, one thing that could even be sort of mentioned, I know that you can look at annual reports, right? And you might be seeing what direction does the firm want to go in. Well, I mean, if you actually look at what are going to be the main drivers for their revenue, I mean, then you'll have a better idea of, well, in reality, this is what they'll probably want to do because it accounts for so much of their revenue, right? And, this is, again, something that I would encourage, not just looking at their earnings, right, but also looking at other things. You might even try to look at, their capital expenditure, right, but in terms of their different segments, because again, a firm might be telling you, we're thinking about going into this direction, but if you actually see it in, sort of say their balance sheet and you see those dynamics, you'll definitely be able to prove it and get a better overview of where the company will go going forward, because that's essentially what we really want to do when you're looking at the outlook and forecasting.
Those BI explains, I don't know if they've changed their system before because it's a few years old, but the drilling down, I missed, and I saw that with Nicholas as well. And there's some drill down buttons I didn't know exist, and they're just sitting right there. That BI, click on that, all kinds of stuff. So,
yeah, that's something I was looking at, and I was able to sort of see that as well. The interesting stuff again. I know that I used it a lot when I was doing sort of my security analysis paper. But again, right, another thing I do want to sort of talk about is an additional function that I thought it was pretty important as well, but it's the supply chain analysis function, the SPLC. So essentially with this, and here we're using sort of the example of Boeing, right? We can see, well, who are the customers who are going to be buying, right, the products, right, from Boeing, and of course, who is going to be supplying Boeing. And sort of an example here was, well, majority of their revenue is actually coming from the USA, right? So that might lead you, when you start thinking about revenue and earnings, well, one thing that you'll probably be keen on, right, is the outlook in terms of military spending, especially if right, as it's seen here, the government is going it will be the main customer for Boeing. And then you can also consider, right, the suppliers. So you can see, in terms of how, what will they be doing? What will their supplies consist of, right? And that's sort of the interesting thing. You can sort of go into these different companies, use that company description again, and sort of see, well, what are they actually going to supply Boeing with? And after that, you might do your own analysis in terms of, well, how are these costs going to add up to Boeing? Will these change going forward? All these things, right? But essentially, with the supply chain analysis function, you can definitely get a better overview of who are going to be the main sellers and the main suppliers, right, of the firm that that you'll be looking at. So
one thing that's challenging on this is all these numbers. So when they say revenue 83%, it comes to 7.35 on Spirit and United. So the 1.1% is the percentage of Boeing's revenue coming from United. Is that what that's saying?
yeah,
I wasn't sure on the CapEx what that meant.
yeah.
That's United's CapEx and percentage of
I think the cost of goods sold that makes up Boeing's.
Okay.
Do you get what I mean?
Okay.
So,
But the revenue, what percentage of Boeing is their revenue?
that's what I'm thinking.
So Boeing's 83% of Spirit's, and Boeing is, and they were 7.3. Okay, that makes sense. All right. So on the other side,
Yeah,
Continental is 11% of Boeing's. And so what is the CapEx? That's the one I can remember. I actually missed that question because I missed so small on my screen I couldn't actually read it wrong.
no, that's actually
60%.
no. I knew it for a while. That's why I knew these, but
And it can't be the percentage of the CapEx that's too low because GE is too low. how much volume is of their CapEx, I guess it could be, but you would think that would be,
Yeah, that wouldn't be, that'd be really weird.
I guess that's possible. That may be what they mean, but
Hmm.
but Continental just buys all their planes from Boeing, but they're only 1% of Boeing's revenue. I guess that's possible. Maybe the other 40% is Airbus. I'll have to look it up. I remember I talked about it, but I kind of got mixed up.
Hmm.
I
Yeah,
should somehow explain that in the chart. But I don't know if that's what the I means. I probably what the I means. Click on I.
If we would've- I'm actually gonna do that straight after this. I'm curious now. Because I knew the cost of goods sold, right, and sort of
Yeah,
how that makes up.
Yeah.
But yeah, no, and again, right, this is actually something I use uh, in my own paper, and it just gives you a better overview, right? At the end, you want to sort of have the best sort of sense and feel for the company that you're analyzing, because at the end of the day, if you're going to invest in it or not, whether the company appreciates or maybe depreciates, these things could have maybe been foreseen, right? If you did your due diligence and if you looked at these things and seen the primary suppliers and primary customers of the firm, right? But that sort of concludes at a high level um, this section. And again, right, these are actually some key functions that they did use, and you'll look at, but when they start talking about initial public offerings, the history in terms of how a firm has paid their dividends, right, using the DVD function, DVD, but right, and so on. So these are actually pretty important functions, and again, because we are looking at the equity module, this is definitely more exciting. It's going to be more interesting because these are things that we can relate, right, currently when we turn on the news or if we hear about companies. All definitely relevant things, as were the other modules, right? But this could definitely be more interesting and more applicable if you're looking at your own investments. But that sort of concludes this module, where we sort of got a high level overview of, well, what's the difference between a stock and a bond? What are going to be some of the main key functions when you're looking at a company, right? Of course, you're going to use that FA function. You're going to be looking at the description of the firm, and you're also going to see, well, how are the revenues going to be divided, right? Especially if you're not looking at a company that's, sort of one-dimensional. You might look at a restaurant, right, and take their revenue as face value. But if you're looking at a company such as a company that's in medical technology, right, might have different segments of their revenue, or even, an Amazon, where AWS actually plays a big role. That's where you're going to want to see those things segmented. But for the next section, I'll be going into, more of the theoretical and, formulas that they sort of did mention in that second half, right? We'll be talking about, beta, capital asset pricing model, weighted average cost of capital, right? These are all things that were touched on, but, at a high level approach, again, right? In the modules, you sort of seen, well, where do they get these numbers? And that's where it sort of ends, right? But these numbers are definitely important. So in the next module, I'll definitely be adding sort of my own spin and letting y'all know more in depth, right? What do these numbers mean? And especially if you're like a finance major, these theories are like, very applicable, and you can definitely use them straight from the jump after knowing them.
But I'm not behind them. They're about the same spot I am.
Yeah.
All right, good. I use about half of those. That CCP is a really good one I have.
Yeah. I've even seen that. It's more in depth than capital IQs.
Right.
Yeah, capital IQs. It gives you the segment, but these, when you click on like the little I, the VI, it gives you where, like the location, the geography, very in depth, right, with the CCP function.
Cool. So we're in now, and just to show, okay, so let's see. So this is the basic, and then if I just to show, if I wanted to change my plan, this is just for the whole year. This isn't like,
Why would anybody say when they're coming up? Oh, it's off of the normal price.
Yeah, and then here are the monthly. So I just have, the pro is the basic. Pro Plus is $30 a month. And this just tells you kind of everything you get. You can put 2 charts in one window, ad free, all of that good stuff.
It's so busy, I would think.
Yeah, it does. The reason why I did have the premium, and this is, I actually just thought about this. Let's say that you're like, this is what you do like every day. You know what I mean? You can pull up 8 different charts on various screens. So if you had like a dual screen, or if you had 4 screens, you can pull up 2 on one screen, 2 on another, 2, and then that's where it becomes beneficial. But if you're just kind of like a day trader, a retail trader like me or anybody else, after the Pro or the Pro Plus, you don't really need anything else. And I don't even use indicators. So having 10 indicators does me no good. So the only thing I really use it for is this right here, is to have the extra alerts. Because you only get 1 or 2 with the basic. And then I also do it because I use the volume sometimes. So, and then for the multi-monitor support. So, yeah. So those are the different plans, just to kind of show y'all. So let's pull up. This is gold. I was looking at it already. I'm not going to mark that up because I already did. Let's just see. Let's see. USD. This is the US dollar versus the Swiss franc. So I'm just going to go back. I'm not going to pay attention to where the price is at right now. I'm just going to go back a little bit more. This is, oh my God. I'll get back far enough. All right, so this is November. This is actually May of 2018. So let's find where price is actually at, because I lost it. There it is. Boom. Here we are. This is where price is.
Or how is currencies? So higher is the US is strengthening, or the Swiss? This is first Swiss versus US?
Yeah, this is the US versus the Swiss franc. And I actually have it written down because I always screw it up. So let me pull it up real quick.
That's why currencies. It's like you gotta know what's in the numerator, what's in the denominator.
So US dollar versus XYZ pair, right? If the US dollar is in front, if the US dollar is in front and the dollar is losing its value, you sell it. So in this case, the USD versus the Swiss franc, if the US dollar is losing its value, you would sell the Swiss franc. I mean, you would sell this pair.
Yeah, but when it goes up, is that the dollar strengthening?
Yeah, so if it goes up, so over here, the US dollar is stronger than the Swiss franc. And then over here, when it's starting to come down, the US dollar is weaker than the Swiss franc. And then if this were the Great British pound versus the US dollar, it would just work inversely.
Yeah.
So,
well, like the Japanese yen, when I see that inverted, it's like I can't deal with 102.
right.
Okay.
So we're gonna trade on the weekly, but we're gonna trade on the 4-hour, but I like to come to the weekly just to get my markups, and this is really kind of ugly, so I might not do this. Okay, that's better. This is the daily time frame. So again, I like to just go through and kind of mark general areas. Again, we're in 2016, so I like to just go through and mark some general areas that I find and continue to see how price plays through them. And so we're just gonna mark them here. Okay, and see how price continues to play off of these zones. It's not working. And feel free, I don't know who's on the Zoom, but feel free to definitely go through and find your own zones on your chart. Trading view gets kind of weird because and this is the only thing that I don't like about trading view. It gets kind of weird where it doesn't always lay flat how it should, the chart. And so sometimes it's hard to see. Like you see how that's all jumbled up and stuff. So
Yeah.
so sometimes you got to zoom in a lot, but at that point you can't
They want to be able to see it.
the trend, yeah. So it's just
The candles look like one line.
exactly. So it gets annoying. So that's the only if I had to knock trading view for something, it would be that. So let's just see. I might have to go to like a monthly time frame. Just to no, that didn't work either. So we're gonna go back down to the daily. Okay. So this is the daily, and so I'm gonna do this a little bit differently than I really want to, just because I can't get a good markup because TradingView isn't cooperating. We're just gonna play the chart. This could be a little small zone through here. I'll give it a different color so I know that it's not a really big one.
Now, why are you marking this? Is that because of the bottom of the?
Yeah, I'm marking this just because, and I really want to mark it more. Yeah, it keeps crossing this so that's why I'm marking this area. And then I'm marking this because it rejected here, here. If we were to extend the zone up just a little bit, we see it reject here. And then I want to see what it does over here. It crosses it here, rejects here. And then this is where price is at kind of right now. So I'm gonna do something a little bit differently than how we did with the pound versus the yen, because our chart looked a lot better with the pound versus the yen. So I'm gonna play it a little bit, let it, kind of do what it's gonna do, and then I'll keep marking my zones from there. So it's selling right now. Bounces. Ooh, that's an ugly candle. That's a terrible candle. Okay, so let's see. So it broke there. I'll let it make its own support. So that's sensitive. What is oh, okay, so somewhere here. This whole entire area is sensitive. So there's some peaks here. So let's just see. And this might not be a perfect markup. Let's just see. I just want to see where this leads us. And I'll adjust it from here. Up. Projection here,
Now,
here,
looking at higher lows.
here. Yeah, the chart is kind of ugly, so I can't get the markup I want to, because I want to see, okay, is this a higher high, higher low, and that's what I was kind of looking at last week. So it's a whole lot clearer.
Where's that high in June? Is that higher than the previous high? That one in June there, right?
Oh, over here,
Is that higher than the previous? They're almost equal.
just about. They're just about equal.
Well,
So we're seeing good downtrend movement here, right? It's in a downtrend. Okay, so we're looking to see how price is going to react off of these zones. Is it going to keep dropping? Or, because it did reject here, or is it going to do something along the lines of maybe something like this, give us something somewhere in here, right? Or will it just, this is what I'm thinking it's going to do. will it just come here and come all the way down, you know, so. Let's see. If I don't like how this pair moves in a little bit, I'm just gonna throw it out, we'll start with another pair. Oh my God, what is it?
Well, you see, all day, I think there's some news.
Yeah, it's-
Did that on the way out the other time too.
This is
In fact,
definitely.
that previous one, where you had a bunch of those in a row.
What is going on? Small zone.
I mean, boy, I would be putting the Fed calendar on them too. You trade on days when the Fed's meeting? Is that too scary?
NFP week, I do not, non-farm payroll, which comes out the first Friday of every week, I do not trade. I actually don't even trade on Friday,
Yeah, those are.
because Friday is one of the crappiest days of the market, because it just, the market will be going up all week, and then because it's been buying all week on Friday, it has a pullback. And it's not like a significant enough to really ruffle any feathers, but it messes with my money, so I just choose not to bother with it. So,
Well, they argue too that Monday is 3 days worth of information.
yeah, Monday sucks
It's,
too.
you know, it's not so much information, but it's stuff.
Yeah, I hate Monday and Friday. Those are the two worst days to trade, in my opinion. Just because it's just exactly. And then Monday you're reacting to kind of what may have happened over it, so it's just too much. Yeah,
In the currency, there's more weekend news than for stocks.
there is. Because currencies open up on
Start earlier.
on Sunday, so let's just see. This is kind of an ugly candle. I'm really thinking about throwing the pair out now and picking something better. Okay. All right, so let's try. Let's get in. Let's see. We're gonna short this. Take it to. Okay, come on. Move it over. So again, I'm gonna put my stop loss to take me out of the trade just above where these top wicks were. Okay, and then I'm expecting for it to come back down to this low. All right, 2.25. So it's a 2-to-1 trade roughly, which is about where you want to be whenever you take any trade, which is not at least a 2-to-1 trade. You don't want to take it because you never want to either be even or less than even when you're risking your money. So you don't want it to be 1-to-1 where, you know, you're risking $5 just to gain $5. That's, in my opinion, worthless, you know, and that's how I've always kind of been taught. So, you know, if you're getting into the trade, you want it to always be at least 2-to-1 to where if you're risking $1, it's to gain $2, you know, always want to be positive. So, here we are. Let's just see how this goes. Reason why I'm taking this sell, this doesn't look good. Okay, there we go. This is so choppy. I don't like this crap. Oh my God. I almost took us out. What is, okay. Okay, so I'm gonna stop it. I'm gonna go back here. So boom. So, all right, so we see this long drop, and I mean, I just played it forward a little bit so we know what's happening. We see this long drop. Boom. So our TP is down here at the bottom of these wicks. Realistically speaking, and this is just trading psychology, realistically speaking, if we're in this trade, we would have taken our profit here and gotten out of the trade, because even though our TP is technically down here, this is all a big zone, right? So it hits the top of the zone, it rejects. Me personally, because I'm conservative, I'm already in profit. However many pips this is, I'm taking it out of the trade after this candle closes, right? Because this would have never, so for me, this would have never happened to me. This is the daily time frame. I meant to go down on the 4-hour, but it's just this pair is kind of ugly. So I
That's the thing, is where in
So I would have got in, let me go back.
Well, I mean, on the last red one, where would you?
Oh,
Anything?
so let me, oh, no.
It was a huge. But we were talking pennies here.
So let's see. But 2 cents in the currency market is huge. So let's see here.
Right, we're in that day where you.
So let's go down to the 4 hour to see. So here, we're on the 4 hour time frame. This is the same trade that we just drew up or marked up. Okay. So we're on
All in the day.
So this is in the middle of that day.
How do you know when the day stops?
Okay. So this candle is the 25th, right? And then this next candle is going to be the 26th.
That's your last one.
Yeah, so this is the last one right here. Because
That last one, second to last one, is where you're getting the top of that. So maybe you could get the trade in right at the end of the day, but how fast did you have the next day if you didn't get it in the day?
if you didn't, let's see how it plays
And
out.
it just seems like you gotta be sitting there looking at this.
No, you do. You definitely do.
Maybe you had some time the next day, but you
So let's see. So we're letting it play out.
still okay.
This is the next day's candle.
So you would have had time in the morning. You had 4 hours in the morning.
So for me,
Yeah, if you did it first thing in the morning, it would have been fine.
So for me, after I saw this candle, I might have given it one more candle, but after I seen these 2 candles next to each other, I would get out the trade. Reason why, I don't know if you remember. So this is one of those buy candles just because of its structure. This is
You got good reversal there.
and this is technically a sell candle. And I don't know if I hit on this or not.
Yeah.
But whenever a sell candle or a buy, so whenever a sell candle is at the bottom of a downtrend, it turns into a buy candle. Especially at least with these wicks. So like this is
Buyers are walking on.
exactly. And so if this is technically on this time frame, this is a downtrend on this smaller time frame. Now obviously on the higher time frame, it might not look like that, but on the 4 hour time frame, which we're on right now, this is a small downtrend. And so this is a buy candle followed by, in this scenario, another buy candle. I would have gotten out of my sell right after this candle. And then the next day, I would have been fine. Plus, I would have moved my stop loss from way up here down to at least break even so that I wasn't, risking money and stuff like that. So,
That one worked, maybe about 8%.
but we're gonna let it play out though, just to see, because it did do a lot of bouncing back and forth. So we'll just see. So if you didn't,
You might sell again about 99 days or so.
so you would look to sell again
Oh,
on
wow,
that
okay,
candle.
so that's breaking out, so
You're getting close to that,
oh, that's.
to that loss.
There, okay.
Yeah.
Let's see.
So if you wanted to sell it again, hopefully we would have gotten out down here. If not, at least after this daily candle, right? Because even if you get out after this big buy candle, you're still in profit, right?
Yeah.
So you missed out on a good amount of profit by not taking it down here, but you're still in profit. So, but then if you waited another day, you lost all your profit and now you're in the negative. But let's just say we waited. Worst case scenario, we enter again on the sell. Worst case scenario, you enter again on the sell. And then let's see what happens. Big sell candle. Buy back up. This market doesn't really know what else to do. This is why I don't like trading US. Yeah. So again, so that's another, okay, so it's another candle that dropped all the way back down to this area. So if you had a sold it again from up here, because it did make that evening start pattern over here, which is where we were looking at, and we were saying this would have been a good entry to sell. On the daily candle, but I came back down to the 4-hour time frame. So this was that daily candle, which I will highlight this and then show it again on the daily time frame. So this was that sell candle that we saw on the daily, right? And if we did check our 4-hour, saw this pattern, we'd have been good to sell. Could have sold it to here, which would have been a good conservative sale. We'd have made profit. Or if you did take it all the way back down, you could have sold it to here, and then you would have gotten out here, somewhere around there. Let's see. I just want to see if it's gonna actually shoot through though, because that's where my long TP is.
Well, that was better right there.
All right, so we would have lost if we had waited. If we didn't get out here, didn't take God's graces and get out again here, we'd have lost that trade. But so for the purposes of teaching, we'll just say that we lost there. Although there were two really good opportunities to get out. And there was another opportunity to get back in the sale and make money again. So, but just for opportunity, just for the purposes of teaching, we'll say that we lost that one. Okay, so boom. So now we're looking, what's the market doing? I'm thinking now, because it did not break here. Now I'm thinking about buys. Now I'm thinking about price coming and doing something along the lines of this right here. Coming back to test this zone before it ends up breaking through here. I don't think it's gonna break through this high. It didn't break through this low. Bounced off of the top of this low, comes back up. So now we're looking to see.
Somewhat quarter.
So now we're looking to see if it's going to, we wanted, honestly, to get a good entry, we wanted to retrace down a little bit off of this zone, retrace.
Now, what is
Then
that
break
candle
up.
there? Is that bullish or bearish? That's a pretty strong upward.
This one right here,
Yeah. that's
this is
pretty
bullish.
strong. Yeah, so you would still probably short it for something like that.
No. We for a better entry, we wanted to, we're not gonna short it. I'm only looking for buys right now because it didn't break through my low. And since it didn't break through my low, I'm only looking for buys. But for a better entry, I don't want to just hop in the trade right now. So I want to see if it'll maybe give me back some. So maybe bounce off of this zone, pull back to here. That way I can buy it from here past this previous high, if that makes sense.
All right, I thought you were looking for a sell.
Oh, no. No, I'm not.
Buy.
So boom. So
you're gonna buy.
so we would buy,
Well,
hopefully.
you didn't quite get a buy, did you? No.
So I came down to I came back down to the 4-hour to just see where our good entry would have been on this. Okay. If we're on the daily time frame, we're looking. This is a buy signal. It bounces off of this zone, long wick, but it bounces off of this zone. Let's see. So hopefully we would have got in somewhere down here on a shorter time frame, but we'll just take this as a long trade. That's the wrong way. So we take it somewhere here. Move this up. Move this over. Somewhere here. Let me find my next point though. I'm not just bringing it up. Oh, there we go. A little bit of price projection up here. And this is just kind of how it works when you're back testing, especially a terrible pair like this. I really don't like this pair. I don't trade it myself. I don't know why I'm using it for teaching purposes. Really, it's not very good. But this is kind of what happens. You mark up your first couple of zones because that's where, that's where price is at currently. And then you might not mark up your next zone. You might have to go back and mark up your next zone for where price is going. So price is buying right now, and we only had zones marked up for where price was at, right? So now we have to go back and mark up for where we think price is going. So these were some highs. Okay, so I think that price will definitely go here to these highs. So I'll make this an even more conservative trade, right? And I'll take it up to these highs. Long term, we definitely want to see if price can get up there. If nothing else, this is what I would say. I probably am expecting.
How much, put in the fact that you've got to roll around now? I've always thought round number like $1.
Round numbers are important.
Some psychological.
The banks,
Either a resistance point and finally a support.
the banks like round numbers, especially the super round ones like $1 and $2 and stuff like that. But they love round numbers, at least from my experience. So I don't think that I think of it all the time consciously. I think of it a lot of times on the back end. So I won't mark up a round number and just say, I think price is going to come here. But if price comes there and it starts rejecting, I'll kind of go, oh, this is $1. You know what I mean? And so
Well,
it kind of
people
goes
saying
from there.
next time it hits this, I'm gonna do this. They do that with round numbers. So next time it hits 98.23645, I'm gonna trade. Next time it hits $1, I'm gonna buy. Next time it hits $1, I'm gonna sell.
Right.
I think that's the psychology. I don't know, it'd be interesting if anyone's ever done a paper on like the S&P 84,000.
What was the psychology? But yeah, what was the psychology behind it?
Yeah. Technicals.
All right. Okay. Yeah. Okay. All right. So let's see why, and let's see why this happened. Let's go back and let's see where we should have tried to save ourselves and get out. Okay. So why does this not work? Boom, rejection here. So it doesn't want to break through here. I'm gonna show you what's forming, and then we'll just have to see it actually form. So it's making a double top to come back and sell all the way down. Okay. Again, we wanted to catch it and buy it through these highs. But again, the way that I trade, if price doesn't break through highs, I'm cautious. Okay. So it doesn't break through here. That is a long wick. Probably shouldn't have took the buy. Because of this super long wick, probably should have took the sell. But it's okay. This is why we back test. This is why we learn. So we did take the buy. Where would our saving grace to get out of the trade have been? This day right here. Because now, the reason why, now we're looking at it not as this is about to be an uptrend. So we're not looking at it as that. We're looking at it now as the top of an uptrend coming down, if that makes sense at all. And I know that that's kind of hard to kind of envision. Let me take this off so you can see. But we're looking at it as price is trending up. So we're ignoring this small pullback, and we're counting all of this as one high. And so it rejects, comes here.
Isn't that the last one?
This right here,
Yeah.
it is. It is. And so that's why I was saying, like, now when we see this candle, if we were in a buy, we should be out now looking for a sell. Okay, now we didn't, because we're just watching to see what happens. So boom. So then it comes sell candle. So that's why we lost that. We would have lost that trade if we didn't get out here. This would have been the perfect time to get out. But if we didn't, that's why we lost the trade. So boom. So now we're looking for it to do exactly what I had said. I'm sorry that candle started, but we're looking for it to do exactly what I said, to form this double top. Double tops are signals for sales, okay? And then double bottoms are, they work the same way except for opposite. They're gonna be signals for buy, okay? So we're expecting for it to now, this time, it is gonna break through here. Okay, it is gonna break through here. Only way it doesn't is if it does something stupid, which I have seen markets do before, is if it does something like, like a consolidation period and keeps doing this back and forth. That could happen. But realistically speaking, this is looking like a double top and it's looking like it's gonna sell. So so we lost this trade. Technically, we're 1-1. For now, though, we'll just call it 2-2. I mean 0-2 for now. Let's see what happens. Yep. This is our entry for sale. I still feel like it's too early, but I feel like I'm gonna be like, oh, I should have sold it. I should have sold it. Okay. Now let's short it. Why do we keep doing it? Put that right above that price point. Okay, right above this zone. I'm hoping for it to really respect this zone. And then we're taking it below here, but just to be conservative, because last time it didn't want to cooperate. We're gonna take it to the top of that zone. So here's our risk to reward ratio, 2.5. It's always important to pay attention to that. So it's at least a 2-to-1 trade, so that's important. Okay, so let's see here, see what happens. Oh my God. All right. Yeah, this is. Well, we only have 7 minutes left, so I'm not gonna pull up another pair. But at this point in our back testing journey, you would just throw this pair out and say you're never gonna trade it again because it's not following the technicals properly, and then you would go find something else. The issue is, and this is what the market does at times. So if you set your stop loss here, these wicks would have taken you out of the trade.
Yeah.
And so if it does continue to sell, which would be great, you would have been out of the trade here. And then if it does continue to sell, you're sitting there going, oh, but I made the right call. I just entered bad or late or whatever. Yeah, it's annoying. So, and there's another big wick. Beautiful part. The beautiful part, our zone is definitely a zone that's important because it's having trouble. And there it goes. See, this is what I'm saying. This is what I'm saying. I hate these pairs.
Now it's gonna come back. What if you had not got out?
So
Get out when it crosses the bottom of the zone.
if you didn't, like if it doesn't come all the way down here, so let's say you didn't get out here. Let's say that
Stop loss was slightly.
it was slightly higher. Okay, because this is it's the right trade call. It's just how the market happens. Right trade call, maybe a bad entry, maybe a bad stop loss. I don't know. But right trade call for sure. Where you would try to get out is off of this. Again, I'm really conservative. how I trade now. So, you know, if it gets even in the range of my take profit, I'm getting out of the trade. If it gets in the range of,
Where did you put the take profit?
so I'll put it at
Bottom. Okay.
0.980 basically,
Okay. Yeah, another round.
another round number. So when it came to 0.981, I personally probably would have gotten out the trade. Because at this point, I've sold it from 0.992 all the way to 0.981, which in the foreign exchange market, in the currency market, that's a lot of money within just this little bit. Like to us, that's only a penny, right? But in this market, yeah, and in this market, there's a lot of money within that, you know, a lot of liquidity, a lot of volume within that penny, you know, and so, and plus the foreign exchange market doesn't trade off of the, just off of like dollars and cents, it trades off of pips. And so the real pip count would have been, let me find it, and I can actually draw it. Okay, I can't find it. But, oh, here it is. Cool. So the real pip count would have been from somewhere in here. So this would have been our pip count. This is our pip counter right here. And all I did was grab this ruler over here and it measures the pips. So it'd have been 114 pips. So.
All right. I have to run real quick. Come back. All right. You haven't convinced me yet, but I'm seeing.
And there's our actual take profit would have hit there and it would have kept going.
Oh,
So
man.
that's the thing. Like,
You took the spot a little too early.
yeah.
Well, I could see that happening, but boy, you got to let him line up as well.
Exactly.
All right.
So let me stop sharing.
Excellent. Did that work?
Yeah, it worked. I'm noticing that, okay, wow. So I've been trying to like kind of playing with it and taking certain industries out and seeing if it affects my correlation. And by taking, I think I took hotels and I took out leisure products, and that gave me like the highest R squared I've gotten so far.
All right. Now, what have we done on outliers? Have you done that yet?
I think I made a graph, but I deleted it.
Well, let me show you what outliers, we haven't done outliers. Outliers can be the most powerful thing of all.
Okay.
It's usually it only takes 5 or 6 companies. So what you do with outliers.
Oh, we did do this.
Did we do it?
Yeah.
Okay.
So you do like the sum of this plus this, right?
Well,
Or the
we
difference?
just want what the difference is. So we want a negative number if it's bad and a positive if it's good. So here we rank it 180, but it's actually price 270. So that's good. So that should give us a positive. Oops. We want that minus that. I'm being wrong, but that makes a difference. That minus that. So it's a positive number. So this firm is 37 G. Come down. So what you want to do is essentially take that column U and just sort on it. Doesn't matter if it's higher or lower.
U. We need a T.
So, right, and so the nice thing here is your correlation is on the columns
S and T.
S and T. Is that what I did different zone? Okay, so since it's S and T, you actually can just let's say we don't want anything that's figured if it's a 90. You can actually just delete those. And your correlation didn't go up, so it didn't go up. 53, it did, but not much. So that didn't help us. Let's go down to 75. And boy, you got some huge differences here. Oh, my difference. Oh, what on this one? Let's do it again.
Thank you.
I don't have your spreadsheet yet. So. All right, so let's try it again. So this is still set up. Well, some huge differences. All right, let's take, boy, this can make a bigger difference. Let's go down to 90. Boy, that helps a lot. Let's go to 90 here. We can go back and look at what we're kicking out too, just in case we're kicking out, Tyson or Tesla or somebody. So that makes the biggest difference of all.
And then it changed all these correlations to 1, 2. So that means that the outliers were kind of affecting it basically.
No, because I've sorted it, and so now they're not.
Oh, right.
They're no longer
I
set
got
up. Now, if I go back and resort them though,
By the,
they'll work.
okay.
So, but what column? Column C.
Yes.
And then you can see, then you can kind of do the double by sector and by outliers. We've got everything set up.
So other components has distributors, T1 retail, I think pretty good.
Distributors is a big one then. So where are distributors? Four. Oh, there's only 4. Yeah, that's probably just because there's so few.
So basically what you did was the outliers were based off our fundamental rank our fundamental rank and what they're ranked in like EV to sales basically.
Right, which is where your correlations are.
Okay.
So if you got a correlation of 1, our difference would be 0 all the way down.
Right.
Because every 215,
It'll be the same.
215, and all the way down. And so now you don't have huge differences anymore. You got a few in the 80s. Yeah, I mean now you're kind of seeing the differences by sector too, which is kind of interesting as well. That's kind of cool, specialty retail. Start with the most expensive, which is I've never heard of them. To the least expensive.
Yes.
Is that guess or which
Yeah.
one?
Yeah, I guess. Oh no, Marine Max Incorporated.
I guess, and yeah, Buckle. The Buckle boys, some of these are
Urban
well,
Outfitters.
well-known companies in their shoe carnival. Now we used to own shoe.
So the closer it is to 1 is the better, or the
No,
closer?
further away because
Okay,
here,
that's a difference in price, meaning it's cheaper. For
you
us to
rank,
buy.
now this one's not all that good, but you rank at 125th versus 250. Now, have you done the buy-sell list?
No, not yet.
Haven't done that. All right, let me see. All right, so distributors off just because there's only 4 companies. Leisure products might be one to look at.
There's only a few companies in that one too, I believe. So like maybe 7.
Yeah, because if they've got the hotels separate, I mean, you can again do it, so it goes down the what line 154. You can see how big of a difference it makes. So that's the nice thing is you only have to delete these 2. You should get an error on that one. That didn't really help all that much, right?
It was 80 before. I think it went like
Yeah,
up
just
a little bit.
hardly maybe to 81. So there's no reason to kick them out. All right, let me show you how to do the buy. So let's give ourselves columns. So right there in T, type rank, and then below that, type difference. You know about how many companies you have?
We have 254. Like
But we've deleted some, right?
I think we'll delete them from the outliers or just before.
Yeah, before the outlier, with including deleting the outliers. So you got 201, 1, 2, 3, 4, so like 197, so about 200. All right, so let's say we want the top 4th. So the top 4th would be the top 50. So type 50 there. And let's say we want the difference. How cheap do we want them? Let's say we want the difference to be at least 30. I mean, I'm just throwing out numbers.
So let's say it's 30.
Well, just type 30.
Okay.
We're on right.
For sure.
Right. Yes, type 30 and enter. Hey Jay. So
What's going on?
So why don't we resort it just real quick?
Okay.
It's gonna mess, well, it's gonna mess up. That's the problem with deleting these companies is it's gonna, let's see if we can, let's try this.
Can we hide them?
Yeah. I tell you what, well, okay, let's just do our buy list.
Mhm.
And so, okay, do equal if, we're gonna do a massive if function. So equal if, open parentheses, if column S, and column T, I'm sorry, column T, go over to T.
Just click the whole.
No, just on T5, we're just doing this one company. So if this one company's rank is less than or equal to, go up and click on your 50 and lock it in. Comment if, like this, comment if, and then, oh, where did our difference go? Where's our difference?
Is there?
No, our actual.
I think
Oh,
we
it's over
moved it
here.
to-
Okay, so if the difference is greater than or equal to your 30, and lock that in, comma, 1, comma 0, close parentheses, 8, comma 0.
Oh.
Right, now copy that down. Just drag it. Say we're just finalizing our buy list here. Go all the way to the bottom just in case there's some more. That's probably it.
Yeah. 240.
Right. Go to the very top, very top, up above that buy list.
Mhm.
Title. Go to that buy list and right above it, the equal sum and just add everything in that row, in that column, equal sum and add them all up. You probably want about 20 companies.
Equal right here. Oh. This?
No, you want to just, you can't sum itself, so you gotta go down row 5, everything from row 5 all the way down.
Okay. I think it's this to.
Hit enter. 15, 15 is not bad.
Then we can sort on this.
Well, we can just look at them and see what we got here. So, so let's bring up, Jay, I don't know if you're seeing everything we're seeing, if you're seeing the Bloomberg on here.
Yes,
We shared it, but let's just look at one of these companies. So I've never heard of this company. So so type FNKO and then hit your function A key. And then type DE test. Enter. Have you ever heard of Funko?
Mm-mm.
Manufacturers markets toys.
I think
Keychains,
sounds familiar.
pens, ride, toys. Interesting. Funko, that might be, let's look at their website and see.
I feel like they make those. Those like. Those things
Oh, those paddle balls.
No, like the things you put on, like the things on your pencil, like the little erasers and stuff like that. That's what I
Oh,
feel like. I
yeah,
don't know.
it had stuff like that on it, kind of cheaper stuff.
Mhm.
All right, so it's not letting us do that. So let's go look at it ourselves. So where is it? It's showing it anywhere? It's not. So go find, what was it? www.funko.com.
Oh, those are the people that make those little anime toys, maybe. I think so.
Top 30 gifts.
Yeah.
Oh, they
it
do.
is.
Wow.
No wonder. 'Cause
Those
are
candles,
popular.
what are those?
They're
Those
like-
ornaments, so.
Yeah, but they're like, so I don't know if you've ever seen, I think that's them, like the Funko Pop. Yeah.
Like bobbleheads, well, they got.
People
Dwight
like collect them
there.
and stuff.
Are these bobbleheads or just something else?
I think these are ornaments. And then
Oh,
as we
ornaments.
scroll
Oh, yeah,
down,
ornaments, yeah.
these are like what they actually make a lot of money on. People like collect them and stuff. Like they have like different cartoon characters and stuff like that. I just remember they're called like Funko Pops. They're like rare.
Oh, interesting.
Yeah.
Those look like high margin products. Games, let's see if you know any of their games.
I've never seen.
I mean, games are, who plays box games anymore?
They got Scrabble in the house.
So it's an interesting company. There's nothing, you know, that
Like a red
just
flag.
drops them out. Now, the other thing we want to be careful of though is, so .do Funko, again, if you remember their type ticker, and then hit F8 and then type CRPR. So, yeah, they don't have any credit ratings. Let's look at what Bloomberg says about them. Bloomberg has them kind of medium quality, not high yield, but kind of medium quality. So not real strong.
So if they were over here, this would be bad. Right?
Yeah, this is like junk bonds. The other thing you can do is an FA function if you just want to see financials over time and just see how small they are. This is not even $1 billion company. Their revenues are really small, but fast growing. Look at that. They've doubled, another 100 million, another 100 million, another 100 million. They had a bad year probably because of COVID. You would think COVID would have helped them though, but I think with board games, people would have been buying board
So
games.
it's coming back. They're about to hit $1 billion soon. Or
Yeah,
$1 million.
so they had a bad 2020, but the last 12 months, so that must have all been second quarter. And you can actually even look at that. And look at the quarters. And see what was it that killed them last year.
Yeah, what's second quarter? Q2 98.
What did they have the previous? Well, that's second quarter and second quarter. Whoa, look at that. 98, 231. So yeah, they really have recovered quite well. Yeah, so I mean, I'm not saying we should buy them, but I wouldn't see any reason to pick them up to list.
Right.
So essentially what you're going to do in the spring is you're going to try to get that fifth. Let's say you get 3 team members. With 3 team members, you can analyze 6 companies. So you want to get that 15 down to 6. So let's look at the second one. Oh, I don't like, so there's one we're going to kick out. I can just tell you. So let's go look at them. You get the STRA. I'll tell you why I don't like STRA when you bring it up. So do STRA, F8 function, and then DES.
What do they do?
Well, it's an education service. So adult education. What I don't like about these is they're expensive. Congress hates them, and these online educational kind of things, they tend not to do a very good job of teaching. Now, it kind of depends on what they're teaching.
I've heard of that. My mom, I think she got her MBA from there.
Yeah, these are firms that they give degrees, but the students have a tough time getting jobs off of them. So you might ask your mom about, there's some testimonials that, man, it's expensive, but then I apply and people don't like Okpala on their resume. It's like, I learned all the stuff, I know it, but I can't get a job off it. I know there's some really scary YouTube videos on Phoenix University. So I just, because Congress is so negative on them and all that, they just, but anyway, I mean, that's the idea. So I've tended not to like these. You'd have to ask your team if they like them.
Yeah.
I also don't think these firms as being consumer discretionary. These are the type of firms that do really well in recessions because people lose their job, they go back and get education. So they actually do pretty well in the recessions. So I don't think they fit in the category either.
You think I could look at what they did during COVID and see?
Yeah, you could.
Just
you could do
I'm
it,
just curious.
so the FA function,
It's like an FA, right?
yeah. And then go to the income statement, you can see the ISC number 2. They've been growing. They probably have done pretty well. I don't know the quarters with them because they probably they're not as neatly as seasonal as that. They've been pretty consistent. That's why I say this is more like a consumer staple than a consumer discretionary.
Let's see.
They're growing. I mean, that's probably why our model likes them. They're growing. Their revenue's pretty strong. And I think COVID actually probably helped them quite a bit, although it was like 2019 more so. It's hard to tell because this firm, because it's a school, their 2019 might be like August 2019 through July 2020. And so that might actually even be a COVID year.
Oh, because their fiscal year might start at the end of.
Yeah, we'd have to look it up because a lot of times schools, they want
to
they
go where
line up with
the
the
school year to make their income look higher, I guess, or revenue.
Well, I just said it it gets distorted if they do December.
Mhm.
You know, I don't know, December might work as it is the end of the semester, so I don't know, we have to look at it.
Cool.
But that's essentially what we're gonna do in the spring. So you're gonna teach them, first thing you're gonna do is spend 1 or 2 weeks, you rerun your model, you're gonna get a new buy list. So you don't wanna go with this buy list
Right.
because you can get new information, stock prices are gonna move.
Right.
But it probably won't be, you know, maybe 12 of the 15 will be the same and 3 will be different. Then as a team, you're gonna go through and decide on your last 6 stocks, whatever they are. So you just go through again, there's a bunch of hotels. David, boy, I don't understand what they're still in business.
I gotta look it up because
Golden Entertainment, I don't know what they do. Casinos, I'm not a big fan of gambling, but they can be a good business.
I think also because people are kind of relaxing about the COVID thing, maybe that might help them.
Yeah, travel, they get a rebound. Let's look at look at that one. See who that is.
Okay.
Keaton. Oh, it's another casino. All right. So you obviously don't want 2 casinos.
Right.
But, so there the key is, where are they? I would love a casino, you know.
I was in Maryland. That's where I'm from. So
But do they have any places overseas? So, you know, the place right now is Asia. You want India and China. Those are the people that are gambling these days.
let me make sure I got the right one.
They got the fancy buildings and. I'm familiar with them, but I've never been to Vegas in my life.
Really? You should go. I mean, I can't say much. 'Cause-
You never know if you're a gambling addicted person until you get there. I don't want to find that out.
That's true. Where can I find the website? Wait.
They have a link on the DES if you go back, but it's right there on the right, but it didn't look like it was working.
Oh, this one?
And the other company, you can try it. It just looks like it's not working, but Golden
It's this one.
EMT, yeah,
About Us. Casino
I'm
Group.
surprised the first picture isn't either a casino or a hotel.
They have 9 in Nevada, 1 in Maryland, which is interesting because I'm from Maryland, never heard of it. But they've also, Maryland's kind of doing this thing where they kind of created, I guess, kind of a similar strip where they're building casinos there, so they're probably new to it.
Yeah, the issue's gonna be cannibalization. So
Right.
Vegas is picking up all the New York people, but now Atlantic City's gonna start picking them up, who knows? And then you have the Indian reservations that have their own, you know, people start overbuilding. But then there's a lot of pent up demand. What I think even probably is scary is the online gambling, how that might take some of the business away. But you know, it's an interesting business. It's definitely, it's kind of combining entertainment and hotels. So, I mean, it's there. You wouldn't want to do them and another casino at the same time.
Cool. Keep it in the back of my head.
Yeah. So essentially, you know, we're doing what you're gonna do next January or February.
So I have 2 of this one. So this is
That one used to delete the excess. Yeah, find the one that's.
so that would change it to 14. That's better.
So Winter is air conditioners and all that. So that's an ESG company, and we really want to know, where are they on ESG? You know, are their air conditioners, you know, state of the art, low energy consumption, efficient? Do they have any economic moat where their air conditioners have something special to them? That's the kind of thing we're looking for.
I have a question. So for this buy list, I just want to understand what you did in order to output this number. So
So what we said, there's 2 things we want. We want
Okay.
high quality companies.
Okay.
So here's our list in column T. So we only want those companies in the top 50. So there's one in the top 50. So XPEL, I don't know who that is. So they didn't get our buy list because their difference is only 5.
And we want a difference greater than 30.
Yeah, so this is a firm we think is great, but the market even thinks it's better. So we say, hey, we want to pay a lot for this money. Firm, and the market says, yeah, you can pay a lot. You can pay more than you even think it's worth. So that doesn't make sense. This next one's a great company, and it's cheap, but it's not. Well, no, it's not cheap. It's expensive too. All right, so here's a company that's cheap, but it's only cheap by 4, and we rank it 214. So it's really, so I prefer high quality. So you're going to see we have 2 things going on: quality and valuation.
Mhm.
So quality gives a high rank, so we say we want them in the top 4. So the top 50 out of our 200, so that's high quality companies. So these two are both high quality companies,
Mhm.
but they're also very expensive. So we want
Right.
cheap and we want high quality. So here we come here, and this one just barely was high quality enough.
And the difference between it was
Very, very cheap, 85. That's probably one of the cheapest ones out there.
Funko.
This one's pretty good quality
Mhm.
and looks pretty cheap. And then here, boy, there's our best company overall. Dave & Buster's, well, I don't know why that is. That's really, really strange. And that's the thing when you go back and say, where did they really score well? They've got good gross margin, which makes sense, right? You go in there like you're buying a
Spend
Coke
50
for
bucks.
$5
Yeah.
and they probably cost them 20 cents. Low probability of default,
The higher the number, the better, right? For
the
default.
higher rank. There you did comma 1. I don't know where your ranks. No, there's your rank. I'm sorry. Oh, I'm looking in the wrong spot. So here, no, they actually rank really low on quality. That's the one thing they don't do well on, but you don't have anything allocated to quality. That's the other thing we gotta look at
Mhm.
is where you're getting allocated here. So it's not allocating anything on risk. So that's actually gonna be an issue because you gotta get something on
I
risk.
think I did Solver and it changed that too. I don't know why I did that.
Yeah, so one way we can get something here on risk is we can, okay, let's say we're gonna,
It's divided by 7, right? 1 divided by 7 and allocated to each one.
you could, let's just try this real quickly. Let's take 5% out of that one. This should work. So plus 5%. I think I keep hitting the.
I think numlock.
Oh, numlock is off. Oh,
Mhm.
come on, Bill Gates. No, if I'm using numlock, it should just automatically put it on. Let's take 5 out of there. Let's take 5 out of here.
And you said minus, right?
The TV is not working. So, but I put the Zoom up there. So if they're in here, they'll have to just get on Zoom and they'll have to just show them. Yeah, so
And allocated to risk.
and put 10% in risk, yeah, 0.1 on risk. And see how much it messes up. All right, so go over and see how much that messes up with correlation.
Only a
Not
little
much,
bit, yeah.
Now that may completely change your whole model,
Mhm.
you know, so who knows?
Or is Dave & Buster's? What were they? Hotels and leisure?
Go through that control F and find them. Just type days, you'll probably one day then.
Yeah. All right. 85.
So it's right here. They're still on list because there's those 4, yeah, so it's still on list, but at least you put something there on
Right,
list.
right.
So that's kind of good.
That's interesting. Cool. I
So,
think
so save this. I don't say this is your final model, but if you meet next week, what you really want to do next week is finalize it.
right. So finalize this one or make another one with more recent data and then.
Well, you want to finalize the model and then you'll run the model in January.
Gotcha.
So here's our model. We've done it. And then in January, February, you'll explain your model. It'll take 2 weeks to explain your model, get your buy list, go through the buy list just like we did here as a team. And we'll say, okay, our official, let's say you have 3 members. So you're going to try to research 6 stocks. As a team, you say, here's our real true final 6 stocks. So maybe they agree with me on the educational firm, say, nah, you know what, let's kick them out.
That's interesting. I think I'm gonna try this with like my own personal watch list and see, because that would help me kind of figure out the model, learn more about it, and then I can like put it to this as well.
And here you can explain why it's on your list. So you went through how they ranked. You can say, well, they really ranked well on revenue growth, but we're kind of weak on risk. So we might look at Dave & Buster's and see they're a single B rated firm, and that would kick them out. We say,
What does single B mean?
well, you start at AAA. AAA to single A is high quality. Triple B is medium quality. double B is below investment grade, and then as you go further down, so to me, double B is about as low as I want to go. It's below investment grade, but it's got kind of.
That means it's not an
nice
advisable.
even grade. A single B, triple C, you're getting in the firms that are in a lot of trouble.
Gotcha.
So if you find David Buster's double B, triple, I mean, single B, triple C, you say, let's kick it out.
Cool.
Look at them.
I don't think I've.
And those multi-level marketing firms, you can have any of those, but I don't like those at all. So I would kick it out. So you get from 15 down to 6 pretty fast.
I've never heard of
I
that.
actually, went to 14 as well.
Because we took out that one, double, the one that had two of the same one.
Oh, that's
The Lennar.
Yeah.
I'm interested at Nike or Under Armour.
Well, that may be great companies, you're just not cheap.
Right, that's true.
They're kind of in the top half, but they're not, they're actually priced in the top 20. They're an expensive stock.
Right.
Well, save it, email it to yourself, so you officially have it, and then maybe you convince Jay to be on your team on the screen, but.
Gotcha. That's cool.
And that's like
Cool.
great.
Thank you.
All right, have a good time.
Normal rate, you know? Then it's like rates are like this.
Thanks,
low,
Jay.
and so you do the borrow, you can do like.
Should I stop sharing?
All right, you can see my screen on there, Brian? All right, let's talk a little bit about innovation. Why don't you think banks like Bitcoin? Why don't you think taxis like Uber? Why don't you think hotels don't like Airbnb? Why are these things different? Why don't 9-to-5s like remote work? How is the world changing with these innovations? Well, just what does that make you think about? Do you ever feel sorry for hotels and banks that are getting taken over by, Airbnb and Bitcoin? How is business changing? How are these companies, Bitcoin and Uber and Airbnb, how are they thinking about the customers differently than past, businesses have? They are definitely focusing more on what people need rather than, just what is necessary as a business. Some quick lessons that I've learned over the years. It's not what you make, it's what you keep. What do you think that means?
Keep customers.
Well, just for your personal investing, it's not what you make, it's the money that you keep. What does that mean to you?
So as saving, you're talking about saving,
Yeah,
If you make a lot of money one day in the market, and it suddenly tanks. You made a lot of money, and you didn't keep it though, all the way.
compounding interest.
well, I think of it as, would you rather make $150,000 a year and live off $40,000? Or make $350,000 a year, but your expenses are $250,000 a year? Which person is gonna be a millionaire faster? Yeah, the person that's able to save 110,000 versus the person that's able to save 100. So keep that in mind when you are getting your first job and your first salary. It's not about what that salary is, it's about how you set up your living. Money flows to those that can solve problems. What does that mean to you?
I mean, first thing I think is if you can solve a problem for someone, they're gonna pay you for that solution.
Uh-huh. So
First thing.
when you are in your classes and you get, a big word problem and you're supposed to solve it, how you attack that is huge. If you're the type of person that reads it once, doesn't try to absorb it, and then goes to Chegg or, to find the answer, versus if are you the type of person who reads it 3 or 4 times and really tries to understand it and, goes about solving problems in a different way than the first person. Because one of those people is going to be pretty valuable to your boss, and the other one is going to almost be an annoyance. So learning to learn and the ability to change yourself is a superpower. What does that mean to y'all? The ability to change yourself.
how easily can you change your outlook on life? How easily can you change the way you attack problems? How easily can you adapt to new things? What do y'all think about that? Do you think you are easily able to change, or do you think that it takes you a long time to change?
I've gotten pretty good at learning to change, but that's because I used to be really anti-change.
Yeah,
So I feel like, don't change, can't keep up.
that's important to know about yourself, that you realize you used to be bad at it.
I'm open-minded, so I'm very open-minded, always trying to learn anything. I'm trying to learn every sector.
Nice.
Every view.
There's a lot of people that are not open-minded. There's a lot of people that think they know everything, and that's probably the most dangerous type of person you can be around. What about this one? Networking is about giving. You guys agree with that? What does that mean to you?
About adding value to people's lives, just, whatever, adding value to your networking connections.
Well,
Reasons why I think nobody will give you anything for free, they will expect something in return. Not that later.
so when somebody does give you something for free, are you going to remember that?
I would think I'm the
I mean, I worked with this one intern at my job, and he was awesome. He taught me. I thought he was a genius, and we call each other a lot for a lot of things. He calls me when he needs stuff, and I call him when I need stuff. I asked him about a question that I had at work. Within 10 minutes, he sent me a 5-minute YouTube video that he had just made explaining how to do what I had just asked him to do. And I just thought that was awesome. It gave me exactly what I needed. It answered my question. And the fact that he posted a video on YouTube that quickly, without us giving each other things, I don't think that I ever would have got that help. And he called me when he needed advice on talking to a professor about getting into a class ahead of time that the professor had just straight up told him no about. So I told him, don't be emotional when you talk to the professor. Don't be logical. And he did, and he was able to get into class, and he's going to be graduating 6 months earlier now. So don't be selfish when you're networking. Literally, whatever you can get, whether it's time, energy, money, that's a good way to be networking. Your next one, your best teacher was your last mistake. What does that mean to you?
Best teacher was the last mistake.
Yep.
You cannot learn anything without making a mistake.
That's a really good one. That's a really good one. Yeah, if you're always getting stuff right, how are you ever going to learn anything?
That's why I didn't philosophy. High school.
Big time. Me too. Yeah, in high school, I definitely one of the smarter kids, and for many years, people would ask me for homework answers. And about my senior year, I had to teach myself how to say no, and I just started telling everybody like no, and it's a hard thing to do. It's not, you want to be liked, you want to be popular, and telling people no is not an easy way to be liked and popular, but you definitely got to learn these things, and you got to learn from your mistakes. So go out of your way to make mistakes. I was just listening to somebody earlier on a TED Talk, and they said that they were trying to give away dollar bills, $5 to people in public, and she had created a business plan. Her business failed, and she had everything perfect. She thought everything was going to work out, but when she actually got into the real world, her business didn't work. And she said now she uses the analogy of go try to give out $5 bills in public. And in theory, you're like, oh man, I got a great business. I'm going to give out $5. Who's not going to take this product? It's free. I'm giving people. And she said that almost 100% of the time, your business to give out $5 bills does not go as planned. People are busy. People are skeptical. People, almost 100% of the time, you're not going to be able to give out $5 bills in a row.
which is crazy because who's, if you can't give out free money, who's going to buy an actual product for money, even if they need it? So the way you plan business can go totally wrong. Even if you have the perfect product at the perfect price at the perfect time, test your stuff and get out in the real world. So I've got this picture here. I don't think you can see it. Can you see the Forbes picture on there, Brian?
Yeah.
All right. Come take a quick look at it. So this is the cover of Forbes magazine in 2007. And it says, Nokia, 1 billion customers. Can anybody catch the cell phone king? So this was 14 years ago. What does this picture speak to you guys? What are some of the implications you can take from this picture?
Implying that they're gonna be around forever.
Yeah, it seems like Nokia was pretty confident here. It
Yeah.
seems like they had 1 billion customers. There were 6 billion people on the planet then, so they had 18% of the world as their customers. What did they not see coming?
Actually, BlackBerry first.
BlackBerry first?
BlackBerry made the same mistake.
Yeah, they got this little flip phone on here, and I don't think they saw these touchscreens.
Yeah, BlackBerry used to be like the center of every business, like all business things have BlackBerry.
So the story from BlackBerry, he did the same mistake. All his co-worker try to convince him to like copy Apple, like put everything in, but he still keep his mind like, oh, it needs to be a small computer. It cannot be touchscreen.
Yeah.
No, I remember Apple or BlackBerry probably had, the money and the technology to compete with Apple back then, but they went a totally different direction. And that's the story of America, though. The story of America is the story of the American family, the rise and fall of the American family. That is, everything that it's about. So that's one of the reasons why everybody wants to be in America, is they know that if you do work hard enough, magical things can happen. So let's see. This is a study that was done by McKinsey, and it's defining the skills that people are going to need in the future and where they work. So it's a survey of 18,000 people done in 15 countries, and it suggests which of these skills they should prioritize. So there's 56 foundational skills that they came up with, and these are the things that are going to help us survive in the future in the workplace. So for just employment in general, the number one skill to have for employment is adaptability. Being able to change on the fly when your boss asks you to drop this and go to this, I would consider that adaptability. Being able to be flexible is the number one skill that you're going to need in the future to be employed. Number two, coping with uncertainty is the number two skill you're going to need to be employed. So what does coping with uncertainty mean?
Knowing you don't know what might happen.
It's not, yeah, exactly. It's not being scared of what your day-to-day is going to look like. It's not coping with uncertainty is knowing that things are going to happen that are opposite of what you think might happen, and that's okay. Not freaking out when the thing that is least likely to happen happens. That's coping with uncertainty. You don't want to work with somebody that when something big happens, they start losing their head and making other people anxious. You want somebody that's going to be calm and cool and take some deep breaths. So the third skill that's going to help you stay employed is synthesizing messages. What do you think synthesizing messages means? Exactly, very way to synthesize it.
being able to read between the lines, being able to understand what emails and letters and your bosses are asking is the third most important skill you're going to need to have to be employed. So read those instructions, make sure you're following all those syllabuses that your teachers give you. So the fourth one is achievement orientation. It's the wanting to progress. That's the third skill you're going to need to have. And I'll just read through the next five and then we'll move on to the next slide. So fostering inclusiveness, making other people feel included, energy, passion, and optimism, being enthusiastic, and then understanding your own strengths. That's a big one right there. So this was skills you need for employment. We'll move on to the next one. These are going to be skills that you need, or skills that are going to help people achieve a high income. So if you want to have a high income, the number one skill that you're going to need to have is a work plan development. You're going to be able to need to come up with a plan and not just go around doing your own thing. Having a plan is the best way to get to your goals. The number two for high income of skills is organizational awareness. That's knowing how your company thinks, where your company wants to go. That's knowing who your leaders are. That's knowing who your under people, your people that work for you are. Organizational awareness is asking questions that other people are not going to ask. So the third skill that you're going to want to have if you want to have a high income is self-confidence. Self-confidence is huge. A lot of people think that a lot of guys have a lot more self-confidence than girls getting into the workforce. And I would really like to see that change. I think that girls need to speak up more and not be, not let their male counterparts talk so much, because a lot of what they say doesn't make a whole lot of sense. They just talk to talk because they've been trained their whole life to know that people that talk get more recognition. So the fourth one for high income, fourth skill that you're going to want to have, the ability to ask the right questions. People say there's no such thing as a dumb question. When you get to your first job, I'm sure there's going to be some dumb questions. So asking the right questions, learn that now. There was 2 or 3 times at my internship when I asked questions and my boss got really excited. She'd be like, "Oh, I knew we hired you for something." And so asking the right questions can really get your boss excited because you're thinking in a different way than a lot of other people think. So there's definitely some more for high income. Tech translation, coping with uncertainty, role modeling. Those are some other good ones you want to have for high income. But let's go to the next one here. So for job satisfaction, it's a big complaint among young people nowadays. They don't feel satisfied in their jobs. So the skills that you're going to want to acquire if you're going to want to have job satisfaction, the number one skill is going to be self-motivation and wellness. If you're a type of person that can motivate yourself and be well, treat yourself well, that's the biggest thing you can do to being satisfied at your job. Not the type of work you're doing, not the people around you, but yourself. Getting yourself motivated and well is the biggest thing that's going to make a difference in your satisfaction. The number 2 skill to have about job satisfaction is coping with uncertainty. If you can deal with the fact that things are going to change, you are going to be way more satisfied than the person who's always scared about something big happening. The next one's after that, self-confidence, sociability, programming literacy. It's interesting that programming literacy is going to add to job satisfaction. Why do you think that would be?
Make your life a lot easier.
Yeah.
Yeah.
It'll
You can simplify problems and make things less stressful.
Yeah, no, people are gonna want,
People will want you.
they're gonna come to you.
Yeah.
You're gonna feel, so good being able to explain.
your value, you know, that's gonna, I think, a huge reason why you would get promotions, which is gonna help your satisfaction.
Like Ricardo and then we're saying meeting last week, like even fixing simple problems, like everybody's all, just that's how we became so successful, that they can solve problems in an easy way that other people couldn't.
That's, how do you learn in college to solve problems better than the other students?
You know, this may sound a little like obvious, but like going back to just like being thorough with things, like reading the syllabus, will get you far. Because so many people just overlook everything, like the simplest of things, and they want like convenience rather than knowing. So like they just send like in a group meeting, like the obvious question that could have been answered by reading the syllabus, but instead they just send a message, you don't learn anything and expect someone to answer it. So just doing those little things like impress the teacher or impress the students, it will help you know better how things work and all that stuff. I think that can probably apply to a lot of other places.
Completely agree.
And they should be like, read all the syllabus from the next class semester.
Yeah,
That's-
I like to know what's
that's-
covered and stuff.
That's the type of stuff that's huge. I got a job once at one of the busiest restaurants in San Antonio because I memorized the menu before the interview. And they had interviewed like 8 people, and the dude was like, I'm giving you the job because you memorized the menu beforehand, and you know, how could I not give you the job?
Yeah, shows you want the job and you also are just taking initiative.
So
And
that,
the syllabus also help you like, to get better grades because you know what target.
Exactly, yeah, and you know when things are due, how the teacher wants it, and then you work better for your boss, which is the teacher.
Personally, my teacher, he give like more percentage for the homework and the quiz and the tests there.
Mhm.
And nobody knows that. Like, I talked to my other classmates, he like, 23. He tell me, oh, this doesn't matter. I'm like, no, bro, this.
They're studying all the quizzes when they're not.
That's-
and they don't turn
that's
the homework in.
huge. Knowing the weights of, that's huge. Yeah, when people are out there freaking out about something that's only worth 5% of the grade, that gives you a huge advantage.
Also, a lot of people are afraid to like approach their professors to like learn, even if it's not related directly to the class, just to ask questions and learn stuff.
Absolutely. That
And
was
then you build a network too, through doing that.
that was going to be my whole speech on Wednesday at the Investment Society.
Mhm.
Is how many of your classmates do you think are reading the present, you know, the lectures beforehand? Like that's what the teacher, that's what it says in the syllabus to do. But I would imagine that 99% of the kids are not doing it, and that the teachers expect the kids not to do it. So if you actually go in there having an idea of what the teacher's going to be talking about, you're going to shock your teacher. You're going to have you know, almost be able to do the homework before the end of class. The other kids in class are going to, you know, you're going to automatically become friends with the other smartest kids in class, because that's what I do, is I look for the smartest kids, and that's who I make to be my friends. So yeah, if you're making yourself known in that way, all the other smartest kids in class are going to become your friends.
Someone like Professor Sweet will tell internships about your companies and
There's
get you stuff and help you out as much as they can to see you actually care.
there's 20 or 30 reasons to do that and 0 reasons not to. So
Pretty much.
have a good one.
All right.
We'll
See
see you,
y'all.
Colin. All right. I just saw that you're there, Jay. Can you hear me?
Yep, I can hear you.
Awesome. We are glad to have you. Welcome.
Thanks.
All right. We're going to talk some about Dave Ramsey now. Jay, are you familiar with Dave Ramsey?
Absolutely. I'm actually on in a Facebook group online. He has a Facebook group, but definitely I have Total Money Makeover, and you know, I really try to follow what he says, you know, the baby steps.
Nice. Awesome. Well then, hopefully this won't be too much of a repeat for what you know.
It's always to be reminded. So yeah.
Absolutely.
So we're going to talk about how Dave Ramsey actually invests himself. And this video actually kind of got me to change some of the way that I think about investing. I used to preach against mutual funds in exchange of ETFs because mutual funds were high fees. But this, what I'm about to tell you, is kind of changed the way that I think. And it's more important to just actually get started rather than to worry about fees. So let me go through what Dave Ramsey has to say about the topic. There's a lot of people that talk, but they never invest any actual money. So he's a firm believer in what the Bible says, that the borrower is a slave to the lender. And the reason the borrower is a slave to a lender is because your most powerful wealth building tool is your income. And when you've committed your income in the form of payments to everybody else, you can't invest it. The average car payment in America today is $563. That's a lot of money. If you invest $500 in a decent growth stock mutual fund from age 30 to age 70, you're gonna have $5 million. And all you have to do is stay out of car payments. That's pretty amazing. And a lot of people just don't accept or realize or comprehend that. Dave Ramsey says the best reason to get out of debt is because it increases your generosity. It increases your ability to invest and become wealthy, which in turn increases your generosity. It changes your life. It changes your family tree. It changes your retirement. It allows you to have financial freedom. But you have to do it on purpose. Getting out of debt in order to invest, it's the shortest way. It's amazing the number of people in the financial world, whether they're financial advisors or writers or bloggers, whatever, they have opinions about money, but they don't have any money. All these people make their money, their customers are 3% of the public that actually has money. Most of the financial advisors out there, they won't even talk to you unless you have a couple $100,000. At my internship at Wealth Management, my job was to screen Dave Ramsey prospects. And my boss told me, you know, we don't really want to talk to anybody if they have less than $500,000. So it was pretty difficult letting people off, you know, telling them that we weren't interested when they told me they had $250,000. You know, it was not an easy thing to do. So if you want to have some professionals, you're going to have to get some money built up. So Dave Ramsey talks about spreading it across 4 types of mutual funds. And I've talked about these in the investment society meetings before. But he says buy funds that outperform the market. What he does is he looks at their perspectives. The prospectus is what a mutual fund gives you before they send it out, which tells you the expenses, the returns, tells you everything about the mutual fund. So just buy mutual funds that have graphs that are above the S&P 500 if you want to beat the market. Have somebody in your life helping you do the investing. All the data says that you'll continue to invest that way. But when you jump, when you're out there by yourself with all of your own theories, and then some newscaster comes on the evening news and predicts that the world is going to end, what do? You cash out all of your mutual funds at exactly the wrong time. And it's because you don't have anybody helping you, telling you not to jump. Instead, you're out there on your own, and you got that person on the news, and you get out at the exact wrong time. He says no one gets hurt on a roller coaster unless they jump off.
I thought that was pretty interesting. You can go up and down really fast, but the only way to get hurt on a roller coaster is if you jump off. If you just stay on, you're going to be fine. You're going to get back up. So all the data says that a decent portfolio of good mutual funds wins. The big thing, the actual thing that people don't do is put money into the mutual funds. One piece of research shows that 75% of the reason why people are successful in retirement is because they actually do it. The savings rate is huge. It's the number that you put in and continue to put in year after year, month after month, week after week. You take money out of your 401k over and over again. And this is really the only way to get wealthy. You don't get wealthy by saving on fees, because fees don't keep you from getting wealthy. Dave Ramsey's a multimillionaire. He pays fees to his broker. He needs somebody that knows a lot about mutual funds. He does not pick his own mutual funds. He knows a ton about them, but he still does not pick his own. He lets them pick 4 or 5 of them, and then he sits down and goes through them and is able to pick out one of those in 30 seconds. He's not going to go through 8,000 mutual funds and pick out his own mutual funds. He's fine with paying a fee. 85% of the reason he picks a fund is because of its track record. And he wants a long track record. He wants someone that's been doing it for a long time. He says he wants neighborhoods with big oak trees when he's buying real estate. What does that mean? If you want a neighborhood with big oak trees when you buy real estate, do you know what that analogy means?
The oak tree is like old tree, right?
Yeah, exactly.
People would know that tree, the land there.
Exactly. He wants a neighborhood that's been there for a long time, and that's what oak trees mean.
I love that.
Little trees means that neighborhood hasn't been there for a while, which means it could turn in, from a nice place to a ghetto potentially. So he's willing to pay a fee, which before listening to this, I was all against fees. I was all about ETFs because they're only 0.5%, 0.05. And I think that's incorrect now. I think whatever you're comfortable, that's going to actually get you investing where you don't have to stop and think about it and actually put money in and have somebody there helping you is the best route, and not just low fees like I have said in the past.
But how about people working financial industry? Do you think they should do the same thing? Or?
That's a great question. I think that people that work in the finance industry overanalyze. They spend months analyzing certain stocks and thinking about it instead of actually doing it. And they tell people all their opinions. They have tons of opinions. They're like me, they talk a lot. But when it actually comes down to it, I think that a lot of finance professionals, they get paralysis of the analysis. They get they get so deep into looking at the numbers that they don't actually get on a system to where they're automatically buying month after month, week after week. They, get on a different system and a different plan, and that hurts a lot of financial professionals. And that one of the worst things about financial professionals and investing is they think, we think we know everything. We think that we know how to analyze mutual funds and stocks, and maybe we do, but that stuff takes a lot of time. To properly analyze stocks is very time consuming. So you have to keep that in mind. Even though you're a finance professional, very few people that graduate with a finance degree are actually researching equities. There's lots and lots and lots of different ways to go into finance, so very few people are actually doing that. One of my friends that graduated from the business school in Austin, the McComb School of Business, he does legal work for a lot of companies that are going to sue people. He goes in and makes sure that their financials are in order. He does this exact same thing. He has 4 ETFs and one big, one small, one medium, and one international. And that's what he's been doing for the last 15 years. And I'm sure he's doing excellent. He says that some months it's a little scary watching them go down, but he doesn't do anything about it. He just leaves them there and doesn't look at them.
It's true, like, it's true, this is like 5-10% out, I don't trust. Even with 10% with the company I trust, but like, it's always that thought in me, like, you know, like, when it crashed, I don't want to lose that opportunity, you know, like, if you can sell it high, if you buy low, you can gain it again. That thought is always in my mind, keep me always all the time.
Our minds are some of the most dangerous places. All right, so let's talk a little bit about the 4 types of mutual funds. You've got growth, income growth, aggressive growth, and international. So the growth and income. Growth and income is an interesting way. I've never really heard it phrased that before. I've always just called it large cap. But some people call it blue chip. Do you know why it would be called blue chip?
I just like this, no, you just said.
Why?
I don't know, but I know what blue chip is, but if you tell me to explain it, I wouldn't.
I didn't know what it was until Dave Ramsey explained it. I thought that it had to do with like blue collar and white collar, but no, a blue chip is when you gamble at a casino, the blue chips are the most expensive chips. So that's why it's called a blue chip, is because they're big companies, they're the most expensive companies. That's the only reason. And they're boring. Of anything to invest in, they're very boring. They're calm. If you were to chart the volatility on this versus the stock market, you would see that it's calmer than the market. And so it's your friend when things are going down. They're boring. So they're boring not only when things are going down, they're boring when it's going up. A growth fund is right in the middle. That's your S&P index. And then there's aggressive growth funds. These are your small caps. These are pretty much your wild brothers. These are the crazy ones. So you might guess that these are the startups a lot of tech companies would fall into. They're crazy, they're weird, and that means that there's a lot of them that fail and there's a lot of them that go to zero. They're going to be a lot more volatile in the stock market. And then there's international funds. As we know, historically, international funds have underperformed. So a lot of people think they're going to continue to underperform. And a lot of people are transferring a lot of their wealth into international funds because they feel that they've underperformed so much that they're going to start outperforming the United States. So that's definitely a debatable topic. Who do you think is going to do better the next few decades, the United States or international? I'm torn.
What's the highest growth potential?
Even I invest in money. No, but like, I feel like the technology is going crazy over there. Technology, they have built everything they do in these streets. We just talking about Apple City.
I agree. No, I think that they are more advanced than we are. So the important thing is to make sure that you invest. Everybody talks about doing it. The problem is nobody actually does it. Even financial professionals get caught up in the analysis and they never actually pull the trigger. Like I said, they get paralysis of the analysis. Dave Ramsey asked a bunch of millionaires how they became millionaires, and none of them said, oh man, I hit a home run. I got this mutual fund that had low fees. You know, none of them said, I got this mutual fund that went straight up and I made all my money off this one fund. You know, it's like a golfing buddy with a stock tip is like a golfing buddy with a fishing story. You really have to stop. You really have to go slow. You really have to be steady. Investing is really the only way to go. Don't chase returns. Do not invest in things that you don't understand. People get ripped off when they invest in things that they don't understand. It's your money. It's just like your kids, which means you need to make it behave just like you make your kids behave. You have to understand what you're doing. And the only way you're going to do that is by getting someone that can help you. If you're doing an estate plan that's complicated, you're gonna need someone that's gonna help you. If you're doing your taxes and they're complicated, you're gonna need someone that's gonna help you. Don't be afraid to find help. You need someone sitting at the other side of the table that's going to help you.
And I'm surprised you say we need people to guide us with mutual fund. The thing about mutual fund is like it's simple fund. Because they actually manage for us instead of.
I mean, I'm saying don't get in yourself whatever system it's going to take you to automatically invest all the time. If you can get yourself on a system picking your own mutual funds to where you're automatically going to have money coming out of your check into that, that's fine. But if you think that the mutual funds that you picked might have potentially cause you some trouble or worry, don't be afraid to get a manager. You want someone that's going to have the heart of a teacher. So when you're picking somebody, don't get somebody that's going to twist your arm. Get somebody that you're comfortable with. That should be it. The important part is most people get to retirement and they're not invested as much as they plan to. And that's your biggest mistake. Stay on plan, stay on course, and do whatever you have to do to get yourself actually investing, because most people don't. All right. Thank you for coming, Jay. I appreciate it. So we're on the amortization tab of that Excel spreadsheet. For our number of payments, we did our years times 12. For our monthly rate, we're going to do equal. What do we need for a monthly rate? We have our annual rate. To get a monthly rate, what are we going to do?
Take the, wait, is the rate multiplied by compound year? That makes sense.
So it's 4% for the year. If we want to know the month, we're going to divide by 12. So we've got equals B3 divided by 12. So 0.33% is our rate per month. And now we're going to need our payments. You guys remember how we get a payment? What function we use? Very good, very good.
You let me know the meeting.
Yes, absolutely. All right. So we got equals payment. What's our rate? Yep, so click on D2. What's our period? Our NPER? $30 years or 360 months. Since we're doing it monthly, with our monthly payments, we want to know our monthly NPER. So click on D1, comma, our present value. What is our loan present value? Very good. So we're going to do negative and click on B1. And then comma 0, because the future value will be 0 when we pay it off, and hit enter. So we can see our monthly mortgage payment on our house is going to be $1,432. So let's start filling in our table here. So for month, we're going to just put 1, down 2, down 3. For date, we're just going to put, we'll put next month, so 12/1, 2021. And then for the next one, put 1/1, 2021, because it's going to be January. Anybody got any questions so far? All right, so now that we've got a couple of months, couple of dates, let's go to beginning balance. So beginning balance is what? Very good. So we're going to do equal 300,000. And now what is our payment? Yep, so we'll do equals D3. Put that in there. And now we need our interest. So what is our interest?
I mean,
Okay. So equals.
the principle is like you multiply everything together, right?
Yes. Let's see. Interest. It's going to be our payment times our uh, 1 second. You guys should be able to figure this out. What is our interest rate going to be? Our interest. How much of that $1,400 are we going to be, is going to go to principal, and how much is going to go to interest? Sounds about right. Okay, so for interest, it's going to be equals 0.33 times our beginning balance. And our principal is going to be our payment minus our interest. Everybody getting that? So our interest and our principal are going to add up to our payment. So our interest is 1,000 and our principal is 400, which means of this $1,400 we just paid, $1,000 of it went to the people that loaned us the money, and 400 of it went to paying off the loan. That's not very good numbers. You just paid $1,000 just for loaning the money. So our ending balance is going to be our beginning balance minus our principal, because the interest doesn't affect the balance of the loan. It's just the balance minus the principal, because the principal is all that matters that we paid off. So we can see our ending balance after the first month is only $400 less, even though we paid $1,400. That doesn't sound like a very good deal. So let's do our next row here. Our beginning balance of January is going to be our ending balance from here. So in C8, click on G7. So our beginning balance is that ending balance there. And then payment is going to be equals, or we already know what our payment is. It's going to be the same thing. Our payment's never going to change. So just do equal D3. Our payment's always going to be the same. Now our interest is going to be our rate, our interest rate times this beginning balance. Everybody keeping up? Keeping up, Jay?
Question, would there be any, would we want to lock any cells in?
Yes, we're definitely going to lock some cells in. Good question. Do you know which ones yet?
I'm trying to figure out which ones need to be locked.
Gotcha. Well, keep thinking about it. I'm going to tell you here in just a minute. So our interest on the next month is $998. And our principal is going to be our payment minus our interest. And then our ending balance is just the beginning balance minus the principal. Because that's how much we owe minus how much we've actually paid, not the interest, because that's not going into the loan. Everybody up? So remember, in the third row here, our beginning balance is going to be our ending balance from the previous month. So go equals ending balance. Now let's do our payment one more time. What's our payment going to be? Yep, same thing. So let's go ahead and lock that in while we're here. So we've got our D3 in cell D9. In D9, let's hit our F4, which is going to lock in that payment. So that'll be a good one to make an absolute value there. And then our interest, what's our interest going to be? Our beginning balance times our interest rate. And then our principal will be the balance minus the interest.
Interest rate is staying the same as well, right?
I'm sorry?
Interest rate will remain the same. So are we going to lock that?
Yep, that's exactly what we're going to do. So our ending balance is the beginning balance minus the principal. Whoops. Looks like I made a mistake here. All right, we're about to start filling this all down and making our lives a little bit easier. Okay. So if we were to drag down this entire column here, you can see that we're going to get, some ugly stuff because we haven't locked in all of our values yet. So if I go back, let's look at our beginning balance. We want that to be able to change, so we're not going to do anything there. Our payment is already locked in, so we're going to leave that alone. Our interest, which of these do we want to stay the same, Jay?
Correct. Python, the interest rate would be locked.
Very good. So for D2, we're going to hit F4, so we get those $2 signs on the red part or on the D2 for the interest rate. Now, if we go to principal, those are okay to change. And our ending balance should be okay to change. So let's try copying this down. And we're still got something a little bit off. So let's see where our problem is. Anybody having any luck? Okay. There we go. Looks like I got it. So we want this to go down 360 months. Oops. I'll be right there, Brennan. So I'm going to select a few of these and I'm going to go down. It's going to count for me. So I can see this little button here. It's at 200, 300, and now it's at 360. So that's counting out the 360 for me. Now, hopefully I should just be able to double click and get all these other lines to adjust automatically. So I just filled in my schedule here. And if I go down to the bottom, it should come out to 0. You see that on the last day, it's going to come out to 0.
How does it know to get to line 360, the other columns?
Once you have a couple of numbers typed in there, you can drag it down. And as you drag it down, it'll automatically count for you.
Right, but so you had column A go down 360, but columns B, C, D, the rest of them, how did you do something for them to go automatically to 360?
Once I have that first column filled down to 360,
Mhm.
when I autofill the other columns, they're gonna go down to match the first column.
Gotcha.
They know to go exactly to that column.
Cool.
Well, that's hard to put it in there, it's not fun. So you want to do that. You want that 0.33 to be staying. You're fine with this change. So now highlight that again and double click it to correct that. Alright. Yeah, go scroll down to the bottom and make sure that bottom right one is 0. Because now that we have this, you can change any number in the top left. If you want to be 20 years instead of 30, everything will automatically go for it. Highlight those two rows in version first. So yeah, now if we go back up to the top and something changes, say we want 400,000 instead of 300,000. Just type that in. Your payment now goes up to 19 instead of 14. And you can see your principal is now 576 instead of 4 something. If we go down to the bottom, you can see our after that many years, our payment is still 0. So our math checks out. If we want our term to be 20 years instead of 30, we can just type in 20 and everything again changes. Our mortgage payment goes from 17 up to 2,400 right here. And we can see our ending balance still is at, oh, these numbers are so big. Something's a little off. But you can see how we can manipulate this just by setting up that chart. Does that make sense? So that'll be a valuable skill. You'll definitely have to do that when you get to one of your intermediate corporate finance classes. All right, moving on. So, does that help you out, Brian? You.
I would have to learn, you know, like, reading language.
That's true, very simple thing to love.
Yep, but the first time you're getting exposed to it's huge, because when you see it again, something hits you, you're like, huh, I think I've seen this before. And it's not a foreign language to you. You can keep up. And being able to keep up is huge. All right, so this is the chart we're gonna make real quick called a football chart. So go to,
You already know how to do this?
I looked it up real quick.
It's a sweet.
The videos that I saw like 3 different ways to do it, and I put together my own way that's the most efficient of all 3 of them. So,
Longer, got us almost there.
yeah, they just did 1 or 2 things that weren't that efficient. So, are you on the tab, Brian? Feel free to zoom in a little bit so it's not so small. So sometimes you want to see stuff charted with a minimum and maximum, and that's a little bit difficult to do. The football chart is probably the best representation of that. So you can see we've got 4 different valuations here, and each valuation has a minimum and a maximum. All you have to do is subtract your maximum from your minimum to get your difference. And that difference in the middle is what we're basically going to be graphing. So highlight the 4 rows, 3 through 6. And then we're going to go to insert. And there's a bar chart here. And we're going to go to the stacked bar chart. So click on that stacked bar chart there. And then all we're going to do is click on one of these green horizontal bars here, which is going to select all 4 of them. Once you select all 4 of them, right click and go to fill and go to no fill right here. That's going to take away those green bars. You're going to do the same thing on the left side. You're going to click on these blue 1 time. Then you're going to right click, go to fill, and just fill them with nothing. So that the only thing we're left in the middle is our middle bars here. All right, once we're here, we want to be able to, since these bars represent a minimum and a maximum, we want to be able to numerically see that. So we're going to click on those right bars again, so you can highlight all those bars that are now white. And we're going to go over to this arrow here on the top right and scroll down to data labels. And now once you're hovering over data labels, you can see that it's putting numbers in those empty boxes. We want those numbers in those empty boxes to represent the highest part of the red bars. So we're going to go over here to this right triangle and move these numbers to, we've got inside, and we've got inside and we've got inside base. That inside base looks pretty good, so we're going to click on that inside base to have those numbers nice and tight against our bars there. Does that make sense? All right, so we're going to do the same thing for the left side. Click on those left bars. We're going to go over here to our elements, data labels. Instead of inside base this time, we're going to want to do inside end, because that inside end is going to get us the minimums. So click on inside end, and now we've got our numbers looking good where we want them to. So we still have all this white space over here. We want to get rid of all that white space. So we're going to click on our numbers down here on the bottom, our x-axis. And Once you have those selected, right click, and then go down here to Format Chart Data. Click on Format Chart Data. Let's try that again. So right click on once you have the horizontal bar selected, and click on Format Access instead. So click on Format Access, and then we're going to change our maximum value. Here's 300, and 300 is pretty far out. Looks like 200 is more aligned to what we want to get rid of some of that white space. So we're going to change our grid here from 300 to 200. Hit enter. So that got rid of some of that white space right there. So that'll work. We could even go 25 and 175. So let's try that and see if it makes our chart look any better. So 25 and 175. That's a little better. It gets rid of some of that extra space. We can change our title here if we want, but that shows us exactly what we're looking for. That gives us a range of these different valuations. So we know that our EV to EBITDA is going to be between 60 and 100. Our PE is between 85 and 130. So that's just a good way to visually represent some of the things you're trying to show. All right. This is something that you requested. Brendan, we'll do some pivot tables real quickly. So, to be honest, I've never actually used a pivot table in a job or practice. It's only been for assignments. So I would really like to get to the point, where I've actually used one of these in practice, and I feel like that'll help my confidence in teaching it. So we're definitely just going to play around a little bit and see if we can create some different tables that show us different pieces of information. So just click anywhere in this table and go to Insert, and we've got our recommended pivot tables or just pivot table. It's nice that we don't have to select on the entire table to get the pivot table. It kind of senses all the information around it and creates its own. So once you've created your pivot table, we've seen this before. We've got our 4 categories. We've got category, product, sales, and quarter. So let's first look at our information and see what we want to know. So we've got beverages, condiments, confections, so sweets. We've got dairy products and grains and cereals. So it looks like we have a bunch of products that are in categories. We know how much we've sold and what quarters we've sold them in. So if we want to know all of our categories, if I told you to make me a table that has all the categories and how much they sold in each category, you think you'd be able to do that? Maybe? Let's try it. So we want to know what categories and what the sales are in each category. So let's go over to our sheet. So our category, it looks like there's about 8 or 9 of them. If there's 8 or 9 categories, do we want those horizontally or vertically? I agree. So let's put our category in our column. So click on category and just drag it down to columns. So that's what we didn't want. So let's try dragging that category to rows. That looks pretty good right there. So if you put category in rows, that's going to create it vertical for you. And each one of those is going to go out in a row. So we've got the first part of our problem. We've got our categories, and now we want to know what our total sales in each one are. So what do you think we should do? Let's try bringing our sales down to rows. Oh, that doesn't look too good. All right, let's undo that. Let's try bringing our sales down to columns. That doesn't look too good either. All right, let's do sales to values like you said. Look at that, you got it. That's pretty cool. All right, so we created our table real quickly. Let's graph this. What kind of graph do you think we should do?
Just a good pie chart or
This column one looks pretty good. All right. So we know all of our categories and we know exactly what our sales are. So what do we want to know next? Let's if I'm your boss and I say I want to know what all of the products and sales are by quarter, how do you think we could figure that out? Well, all the data should be in there. Let's try dragging quarter around and see what we get. So if we put quarter in here, that's not too bad. Now we've got our beverages, we've got all of our categories, and we've got our by quarter, and we've got our sales. And it gives us the total sales right there automatically. We don't even have to do anything. So let's see if we can graph this. Insert. Not a huge fan of the graph, but that'll work. What else? How else can we look at this data? And if you were a boss, what else would you ask for? If this was your company, you sold all these things, you had all these products, all these sales and quarters, what type of questions would you be asking about it?
well, I probably want to know what the actual rate of return was on the service of the need. But
We would have to know how much they cost us to do that. But let's do products. Let's do, if we want to know how much of each product that we sold, let's try that. So we're going to want products in a vertical column. So I put all this stuff back here. So we want products here. So we've got all of our products. That's a lot of products. Looks like we have 80 different products. And we want to know the total sales. Let's go to values. There we go. That was pretty easy. Let's see. If we want to know category. Yeah, no, at this point, we're just playing and making tables. But a lot of tables, a lot of pivot tables have way more columns than this. They have 15, 20 different columns. And so you can imagine when you have 20 different factors, you can probably make 100 different pivot tables off of those 20 factors. Absolutely. If we want to know what categories were sold in what quarters, we could do that. I just don't think we have a whole lot of rows to do it.
Break it down by like locations you have and each item sold.
Absolutely. Absolutely. There's so many different, there's going to be so many different pieces of data when you get out there. All right, let's do hyperlinks real quickly and then we will call it a day. So that last tab there, hyperlinks. When I was working on my spreadsheet at my internship that had 170 different tabs on it, the first tab had 170 different, places on the first tab to click to where you could go automatically, which is making your boss lives easier, which is how you get promotions at work. So if we go to make your boss's life easy. Yeah, Professor Sweet was telling me he had a boss at USAA for 7 years that had him coming in on the weekends and working full days for 7 years straight. And he said that his next boss wasn't anything like that. Totally, respected his time.
Golf course.
What was the point of making you go in every weekend?
He kept volunteering us for stuff out there on the phone, talking to regulators. Oh, we got here, let me do that for you.
He said, Professor Sweet that said that he would call Professor Sweet in the middle of meetings and have him like update spreadsheets for him, like on the fly, like in the middle of a meeting, just so that wasn't even important, just because he could. So it didn't sound like the best boss to have. Did you think about quitting in those 7 years?
Not, but there was a point where I said I won't be in this job in September, and then someone called me this job.
Nice.
Actually, a guy called and asked, "You want to work over here?" And I said, "Absolutely."
Without a doubt.
And then the next day, that guy had quit.
Oh,
So
man.
I called the other Bill in that department and said, Bill called me. He's going to offer me a job. Oh, we're still going to offer me a job.
So, yeah, no, all these little tricks, there's a good chance in your first job or internship, you're going to get a couple Excel spreadsheets, and putting freeze frames, putting hyperlinks, putting coloring, putting all that stuff can really save time. So, and that's the type of stuff that's going to make you stand out from a lot of other people. So put a hyperlink in an A3 real quick. Right click, go down here to link. And then once you're in link, we can place the hyperlink to a web page, or we can place it inside this document, or we can create a new folder. We're going to place it inside this document. So click on that, and then you can choose where you want to put it. So if you scroll up to the top, we can see all of our first tabs that we were working on earlier in the semester. So just click on that first one, Old Town Store, click OK. And now we can see that we have a link here that'll, if you click on it, it'll take us right back to our first tab. Same thing on this first tab here. If we want to create a link that'll take us back to our last tab, we can do it right here in A35. You just right click and link, put in this document. We're going to put it at here by the hyperlinks. Click OK, and now if I click on that, it's going to bring us right back to our hyperlink page. So nothing to it, but that type of stuff. If you have a spreadsheet that you want to link, to a page on the internet and pull up a cool chart that you want your boss to see, that's the type of stuff that they want to know. So that'll do it. Hope you got to learn a little bit.
Yeah.
Yeah, I haven't had a teacher that's actually talked about pivot tables. I know that when you get out there, you're gonna, they were very powerful. But I haven't had a teacher that's, expressed, how important they are. So it's going to be interesting to see how much we're going to use them in the future.
And then, yeah, that hyperlink in Experience is very good.
What are your favorite ways to use them?
Well, I have a spreadsheet like right there, and it's hundreds of sheets long. I want to keep it all in one place. I don't want to break it up. But in order to jump around, I have hyperlinks so I can get back to where I want to be. I don't have to go page. Yeah, it's just around, find stuff easier. But also, if someone brings up a spreadsheet, if it's 100 pages and there's only 4 that matter, hyperlink those, so you just go to those sheets. You don't have
Very cool.
to- you can sort of reduce
Oh, yeah.
it, but-
Oh, yeah, you can definitely rename it. Edit hyperlink. Yeah, text to display. If I want to change that to first sheet. Yeah, real easy. And now it says first sheet right there.